I think last year we had posted a tweet on Zerodha Coin's Twitter handle asking people what's one aspect of their personal finance they struggle with the most. We received a bunch of answers. I think the one common answer there was insurance. We've done some education around insurance. We have a lot of blog posts written by people from Ditto. We have an entire module on Varsity. There are a bunch of Varsity videos around this same topic. But I think we could obviously do more. Since we constantly focus on education, I think we probably could have spoken about insurance a lot more. With that objective in mind, so we put out a tweet, we put out various social media posts asking people the questions they had about insurance. For the simple reason being, most people in their personal finance journeys, most people tend to focus on the investment part, which is the sexy part. It gets all the attention. It gets disproportionate attention. People spend countless hours on best funds, best stocks, so on and so forth. But what they don't realize is that even before they get to the investment part, the first thing they should do is get adequate protection. So that means life insurance and health insurance. The logic is simple. Even if you could pick the best stocks and the best funds, even if you are the best investor on the planet and you're making ridiculous amount of returns, if you have a serious health issue, your investment becomes your health insurance policy. By the same token, if you don't have life insurance, if you are the sole breadwinner in your family, if God forbid something were to happen to you, then your dependents are left in the lurch. So that's why you need to think about insurance even before you get to the investment part. So with that in mind, we put out this post asking people all the common questions, all the dumb questions they had about insurance, because people have this fear of not asking dumb questions. I think those are the exact same questions you should ask. So we reached out to the Ditto folks to ask them all these questions on your behalf. So I have with me Shrehith. So Shrehith, who are you? Why are you here?
Yeah, thanks, Bhuvan. I'm representing Ditto today, but I happen to be the co-founder at Ditto Insurance. And I think when we started Ditto, I think in 2019 is when we truly began to sort of put the foundation in place. We saw two things. One was everybody who bought insurance, they were terribly upset with the experience that they had. You heard complaints about spam, misselling, etc. And more importantly, we felt like it was an opportunity that was ripe for disruption, because there are very few companies that were trying to innovate in this space. When we were seeing, lending, investments, etc. space boom with new players.
So it was not the sexy point when you guys.
Insurance was not sexy, and I still don't think it's sexy. But I think we still needed to do something to make the experience a little bit better.
Right.
And when Nitin obviously also was on board the idea, we thought perhaps it's best to probably do something, and Ditto was born out of the idea, and some of my own personal strife as well, because I had, my dad is of an advanced age right now. He's had terrible health insurance policies, and ULIPs and endowment plans, so on. So I thought that even from an investment point of view, it makes sense to educate more people about insurance, just to ensure better financial security. And so Ditto started with the idea, obviously in 2020 we were a small team of just about 15-20 people.
Right.
Now we're over 250 odd folks, and with the help of Zerodha, we've become a sizable player in the online insurance space. And our objective is very simple, right? Educate people about insurance, help them buy insurance, and help them when it matters the most during claims. Right? It's a simple three-point agenda, and we've been doing it with about 120 advisors on our team right now. And hopefully we'll continue it, and hopefully through this session we'll be able to educate more people about insurance and get them to know about some of the do's and don'ts when it comes to buying insurance, both health and term insurance. So yeah.
No, this is one partnership that we are really excited about, and I mean the way that you guys have grown, the fact that you guys put customers up front, don't spam them, don't harass them, and just do what's right for them. Yeah. Before we even get to the questions that people have sent us, I want to set the context with absolute basic stuff, in the sense that, like, why do I need insurance? Let's start there.
Yeah, I think this isn't a question that's actually specific to you. Most people who even come on Ditto is a platform that actually advises people on insurance, etc., one of the most common questions that we still receive on the platform is, why do I need insurance? Even though you've booked a call with us to potentially buy insurance, right? Because people don't understand it. I think for a lot of people, when they think insurance, they're thinking about these products that pay something back at the end of, say, 10, 20 years, right? And that is sort of the idea embedded within people because of LIC and the pervasiveness of endowment plans. And so their expectation when they come on platform like this is, how much money will I get back? That's what they're thinking, right? But I think for us, for regular people who are looking to buy into insurance, I think the simple premise is this. Insurance protects you from what I call as black swan events. Now let me take health insurance as an example, right? Now imagine you don't have health insurance. Most people think I buy health insurance because if I go to the hospital, I incur a bill of say 1-2 lakhs. Okay, I get hospitalized for dengue, COVID happens, something like that. Right. Hospitalized for say 7-8 days, bill adds up to 1.2 lakhs. I don't want to pay the 1.2 lakhs, and that's why I need health insurance. This is partly true. Right. But primarily why you need health insurance is, especially for the kind of clients that we cater to, right. I think people can put together 1.2 lakhs. For most of the people that we cater to in tier 1, tier 2 cities.
So who are these people broadly? Like
let's say between the ages of 21 to 35, 40, from your metros, from cities, from tier 1, tier 2 cities, like say Bangalore for instance.
Even young people are getting into this.
Correct. Anybody who's actually okay, and they're thinking, I'll probably buy a health insurance plan because I'm hospitalized 1.2 lakhs. I don't want to pay, and let the health insurance get. This is fair. Right. But truly what you need health insurance for is the one thing that you don't see coming. Because right now, for instance, I have a savings of let's say 5-10 lakhs. I've made these savings over say 5 years of working, and I have some money set aside in the bank. I can afford to pay 1.5 lakhs. It will be painful, but I can afford to do it. What I can't pay for is the 10, 15 lakh, 20 lakh treatment for say chemotherapy and radiation.
Black swan
events. Things that I don't see coming. 25 years old, suddenly I get diagnosed with something like say, God forbid, cancer, right? And suddenly I have to pay 10, 15, 20 lakhs. This could exceed depending on, or say you're in an accident, right? You're probably traveling somewhere, you're in an accident, you need immediate surgery, immediately the bill racks up to 15, 20 lakhs. I'm done for. Even if I dip into my savings, I don't have 10, 15, I don't have 20 lakhs, 25 lakhs to pay out of my pocket. You're essentially broke. You have to beg, borrow. There's nothing else. You have to crowdfund. There's no other recourse outside of health insurance. So for most people, they don't think about these black swans because how can it happen to me? I'm 25, I'm 30, it can't happen. But accidents happen to young people.
Just to I'm sorry to cut you off, to share a personal anecdote. I bought my insurance from you guys.
Yeah.
And I write about personal finance on Zerodha's blogs. Yeah. I think the time I realized I needed insurance was when my folks had COVID.
Yeah.
And then I suddenly got scared.
Yeah.
I had one of those existential dreadful moments saying that what if I'm not around? Because I'm the breadwinner in the family.
Correct.
And it sounds embarrassing that I didn't have insurance despite being writing about personal finance. But to your point, I think it's just in at least in cases where people like me were reasonably educated, it's that inertia. It's just that, I will worry about it.
Exactly. And I think for a lot of young people also, they think about themselves and they're like, look, I'm not going to get sick, I'm invincible, right? and yet it happens. And even if it doesn't happen to you, like you said, I was one of the, I have a brother who's also a breadwinner in some sense. But primarily there was a point in time when my parents were dependent on me, right? And I knew that one trip to the hospital, if they're ever hospitalized, right? At that age, right, effectively again, it's a savings extension event for me also, right? I'll have to probably empty all my savings, right?
So I'm sorry that it reminds me of this, it's one line that stuck with me when, I think when we were discussing about posting this on Twitter, I think Nitin came up with this line saying that most Indians are just one serious health incident away from essentially going broke.
And that's true for, I know that there are statistics to show that people in the lower income categories, etc. That's completely true from them, right? 20,000-30,000 1 month, and because they're living paycheck to paycheck. But that's true for a lot of urban Indians as well, the kind of people that Zerodha caters to or we cater to, right? And for them also it's true, right? One bad event could effectively put you in debt and you can never recover from it. There's no recovering after that, right? Because if you're in debt, for, you say 5-6 lakhs in debt, right? You have to then work tremendously hard, right? Or you have to liquidate your savings, investments. If that is done, debt, it takes forever, right? So health insurance is sort of it's almost like a pass from such events, right? You can check that pass and say, "Ki, I'm done. I don't have to deal with this. The health insurance company will deal with this," and you keep your savings intact.
Right.
At that point in time, when your family probably needs a lot of your attention, you're not worrying about money, and you can actually look after your parents, or you can look after yourself. You don't have to worry about that, and effectively it eases the burden so much that with a lot of our customers, one of the things that we see is once their claim gets through, the amount they're so thankful that they made this one decision. They're like, "This is the best decision I ever made," right? Because you were suddenly, the company paid out say 5-6 lakhs in claims that otherwise it wouldn't have happened. In fact, one of my friends recently, not recently, maybe 1.5 years ago, bought a plan for his dad. Because it was fairly, there was no issues, nothing else, right? And then suddenly 3 or 4 months later, he gets diagnosed with throat cancer, right? And that one event, right? So he was getting married at that point at time as well. So he had already depleted a lot of his savings. And then this happens. Now, if it weren't for the insurance, I think he ended up paying over the 1.5 years, he ended up paying, the insurance company has paid out close to 12 lakhs, I guess. So that 12 lakhs, right? Yeah, that's a lot of money, right? He would never have been able to recover that kind of money, right? Without insurance. So I think insurance, especially health insurance or even term insurance to that extent, is for black swan events, things that you don't see coming. And when it happens, effectively, you're ruined. You're financially ruined and you don't want to be ruined, so you buy insurance. Right? That's true for health insurance or even term insurance. Something happens to you, so for instance, I buy health.
Wait, sorry, term is life insurance. Term life insurance.
Yes, term life insurance, and term insurance the only difference from what life insurance people generally call endowment plan, savings plan, is that term insurance there is no money back at the end.
Pure protection.
Pure protection. If you die, your family gets paid a large lump sum. Usually, usually you get something like say 1 crore, 2 crore or something like that, and that money will sustain them for 10, 20, 30 years also, right? And obviously most people think of it as a scam. It's because you don't get any money back, right?
Typical. Indians, we like to see something coming back.
Everybody likes, you like to get money back,
right?
But I think this is one of those cases where not getting money back is actually more useful than getting money back, right?
I think you said 2 interesting things that I, because I think about a lot about personal finance, and it just stood out to me. So one, you don't deplete your savings in the sense that if you have insurance, your money can continue to grow. It'll actually help you reach your financial goals. It's because in the absence, like I alluded to at the beginning, in the absence of insurance, your savings investments become insurance.
Yeah.
And the second thing which actually kind of stuck with me is that peace of mind. It's priceless. If you're protected, you can actually go through life not worrying about a lot of things. And I think a lot of people underestimate that peace of mind. It's something you can't put a number to. But now that you've said the context about why insurance, like the most popular financial product in India are these terrible endowment policies, cashbacks, money backs, whatever. Why are they bad? Like what's wrong with them? Because if I go to, probably your relatives, your friends would have sold you one of these policies. They tell me that I'll get 25% and also insurance. Life is set. Like why are these products bad?
Let me give you a question there, right? When insurance companies say money back, what are they giving? Like they're giving your money back, no?
Right.
It's not like they can create money out of thin air. The only things that they can do is, let's suppose you give them premiums of 10,000 rupees. Right. What can an insurance company possibly do with that money to create more money?
They're going to invest.
They'll probably invest some of it, right? And then you're saying insurance company also has to pay a death benefit, which means that if something happens to you, they have to pay, say for example, you're paying 1 lakh in premium annually, then they have to pay 10 lakhs usually, if as death benefit, if something happens to you, right? So they have to give that 10 lakhs. So out of the 1 lakh you pay in premiums, they'll have to set aside some money just in case somebody dies. And so that they can actually pay out, whatever, they pool everything together and they pay out some amount, right?
So to be clear, so once I buy this traditional insurance products, they promise me a return, and they promise me a death benefit or some life cover or whatever it is.
Correct.
So the logic here is that my money grows a little and I also get insurance.
Correct.
Got it. Sorry.
It's the benefit of both, right? You get the best of both worlds. You get investment benefit, you get life cover benefit, which sounds amazing on paper. The truth is you don't get either. It's like an all-rounder who does probably, a little bit of batting, a little bit of bowling. He's never a very good batter or he's never a very good bowler. And in the case of insurance, it becomes very problematic simply because insurance companies will take your money and they'll invest somewhere.
Right.
Now, before they do it, usually the charges alone will add up to 1-2% of the invested amount. So that 1-2% is gone. You're never going to be able to invest that money. Now, you have to ask yourself, where do insurance companies invest their money? They invest it in government securities. You can do it.
Right.
They invest it in, say, some companies will, directly invest in equity instruments. You can do it. And the benefit that you have of doing it yourself is that you don't have to pay the 2%. Like for instance,
So if I'm buying LIC policy, you're saying I'm already down 2%.
Most cases, yeah, you're probably down more than 2%.
Like what's the worst case? How high do these commissions go?
Well, I've seen, including mortality benefits, etc., it can go up to 10-12% as well. For if you're older, right, especially after 60, right, the charges alone will eat up most of your invested amount, because 50% of your premium invested amount will go into giving you the death benefit.
Wait, what the hell? You're saying as high as 10%?
Even more, right? Even more, because some of it will have to go to give you the death benefit, right? And after 60, if you're buying a plan to give you death benefit, likely you're probably going to look. On average, Indians live up to the age of 70, 72. So in that 10-year window, right, it's likely that you'll probably pass away as well, in some sense, right? That's the reality. So they have to compensate for it. So out of 2 lakhs that you invest, my dad was 60 when he bought a ULIP, right? 1.5 lakh, I think it was 1.15 lakh or something like that, out of the 2 lakh premium that he was investing, went into just providing the death benefit. So what was being invested is 85,000 rupees. So you get the problem here, right?
It's a horrible deal.
Exactly, it's a horrible deal because he didn't need life cover at that point in time, right? He didn't need life cover at that point in time because he had already had savings. He had already invested, he had already had about, I don't remember the exact figure, but yeah, decent enough to make sure that he can take care of his retirement, right?
So all he needed was
some extra income, right? That's all he needed, and he invested in a ULIP. He didn't need life cover, right? Because he has no dependents.
But
Who's his
sure
dependent?
somebody would have sold him saying that, sir, you get best of both.
Of course, yeah, best of both worlds, right? He had no dependents. I have a dependent. I need life cover.
Right.
But my best option is to separate my investments and life cover. Because if I do both, I told you, the charges alone eat up most of my invested amount. So my best approach, if I were saying, if you were asking me how to sort of, buy a life insurance plan, I wouldn't buy a life insurance plan. I would buy a separate term insurance plan where I get death benefit only, nothing else.
Wait, just to clarify it for the
Yes.
viewers, life insurance as people know it
Is
is
savings
different
plan.
from term insurance.
Yes. Primarily when people say life insurance in India, they are referring to savings plan, endowment plans, etc.
So typically whatever your LIC friends might have sold you.
Correct. More often than not, that's what they're saying.
Got it.
And
So
when we are
this-
using term insurance
Right.
as a moniker, right, we are saying only death benefit, nothing else.
Got it. So just to be clear, I buy a term insurance policy.
Yes.
I don't get anything.
Nothing.
The only time I get paid is if something were to happen.
Yes.
And my nominees get the benefit.
So usually you'll have a question like, okay, how long do I need this for, right? So you say until the age of 60. I'm 30 right now, until 60. Anything happens to me between 30 and 60.
Right.
Anything happens to me, I get a large lump sum amount.
Right.
You don't just get, a big difference is when you're buying life insurance plan, savings plan, right? They promise you a life cover.
Right.
But ask yourself, what is that life cover amounting to? For instance, if you're paying 1 lakh in premium annually,
Okay.
as a say 25-year-old, right? You will get a life cover of 10 lakhs. At the age of 25,
It's useless.
think about it. At the age of 25, if I ask you a simple question, right?
Right.
Is your life worth 10 lakh?
Okay, now that you put it, it's leading to a lot of emotions, but it's not.
It's definitely more, right? You have an earning potential. You probably likely earn up till 60, right? And
I think that's an important point people
correct,
miss.
right? You earn up till 60.
Right.
And your your income will grow proportionately, right? So for instance, most people, even if you assume that we'll get 10% hikes every year, if you're starting out at 5-6 lakhs,
Yes.
your life should be
I
worth
don't
more
think
than
people
that.
have that. It's very hard for people to think exponentially.
Yeah, and it has to be worth more than that, right? Or another way to ask this is very simple. Right now, if you have dependents, if you have a wife and kids, or if you have, say, it could be your spouse, it could be your husband also, it could be your parents, it could be anybody. If you have dependents and you're giving them, say for instance, I'm supporting my parents. I'm supporting my parents to the tune of say 50,000 rupees a month. If I'm giving them that money, I expect to give them that money and my potential spouse the same kind of money, the same kind of support until I'm alive, until I'm the age of 60 or until I retire, right? That money alone will add up to 50, 60, 70, 80 lakhs. So there is no way for most Indians living in metro cities who are earning more than 5, 6, 7, 8 lakhs in income, their life is worth just 10 lakhs.
So you had written this post, and stealing this example from that.
Yeah.
You said the way to think about life cover is
Yeah.
if I were not there,
Yes.
and if I were the only breadwinner, if
Yes.
I'm not there tomorrow, if my dependents,
Yes.
parents, parents, spouse, etc.,
Yeah.
I take that money, put it in an FD, they
Yes.
get interest payment.
Yes.
Is that enough for them to live whatever lifestyle they're leading
Yeah.
comfortably? So that's the logic.
That is a very good logic, or you can think of it this way.
Correct.
Can I create a financial replica of myself even in my absence? That will provide the same cash flows
So
to
my salary,
family.
whatever was going to my dependents,
Yes.
comes from the other
comes
source.
from this source, right? This imaginary financial
Right.
replica.
Right.
Most people think it's not possible. It's possible with term insurance plan. So I was saying that the best way to think about term insurance is to imagine creating something that will create the same kind of cash flows as you would have if you were alive.
Got it.
So the simplest way to do it is you take 1.5 crores,
Right.
put it in a fixed deposit, use the principal and the interest, say 5% interest also. You can easily create cash flows for the next 20-30 years to supplement your income if you were earning 10 lakhs.
So my dependents are taken care of.
They're taken care of for the next 20-30 years. And during that time, they can figure out. They don't have to worry about what they will do, right? They can figure out if they have a home loan, they can probably deal with that.
Right.
If they have other loans, they can deal with that. If they have expenses for the next 4-5 years until they figure out what to do, right? How can we replace? I mean, you can never replace a human being, obviously, right? But at least you can give them the benefit of having financial security so that they don't have to think about anything else. Because
Going
it's
back to
already
the earlier point you made, like I can be peaceful knowing that they'll be taken care of if.
Yeah, and what is the price? That is what I'm trying to figure out, right? What is the price that you have to pay to create a financial replica?
What are we talking about in terms of numbers?
Let's say for a 25-year-old, again, right? If you're buying early, buying young,
Right.
a term insurance premium is extremely low.
Got it.
And it's fixed. There's no increase in premiums, right?
So what does it mean?
So let's suppose your premiums add up to say 10-12,000 for a 1.5 crore cover, right? Depending on you're not a smoker, you're nothing, right? It adds up to 10-12,000 per year.
Right.
You pay that 10-12,000 per year for the next 30-40 years if you have the policy for the next 30-40 years.
Which
That's it.
means I pay 10-12K a year.
Yes.
If something were to happen to
Yes.
me, my dependents will get that 1.5 crores, whatever.
Yes, yes. Again, it's like a subscription fee you pay, 10-15,000, that's it. And that is the annual subscription fee to create a financial replica if something happened to you.
And in between, let's say I'm buying till 25 to 30.
Yes.
Sorry, 25 to 60.
Yes,
That premium I'm paying yearly doesn't change.
doesn't change.
It's fixed.
It's fixed, right? For health insurance it changes, for term insurance it doesn't change.
That's pretty
So once you decide on the premiums, that is it, right? You will get, your family, your dependents will get 1.5, and you can change your dependents also. Let's say 25 May, you don't have a spouse.
Right.
You have parents and you've taken care of them. Right? 30-35, you want to change your nominees, you can do that. You can then switch to your spouse.
How many nominees can I add? Like, is there any?
No, I mean, you can add, I'm not sure exact numbers, but you can add I think you can add only one nominee.
Achha.
You'll probably have to check back.
But you
on
can
it.
change
Like,
that.
Yes, you can change that, right?
That's actually a good deal.
Yeah. I'll have to figure out exactly
Sure,
if you can
sure,
add more nominees. But yeah, your nominees will get the money during that time, right? No questions asked.
Which do I buy first? Term insurance policy, which protects my life cover, which protects my life, or health insurance policy?
Right. So I think this is a very interesting question. I wish I could answer just by saying, oh, by health or by term, but it honestly depends on your context. For instance, I told you, my dad is around, say, 50, I mean, he's 60, he's 60 plus right now, but let's suppose he was 55, 56, right? At this point in time, one of the most important needs that he will have to cover is his health insurance needs, simply because he's more likely to be hospitalized, right? In the course of, turning 60 and so on, right? And during this time, his bills can add up to a fair penny, right? So perhaps it makes more sense for him to buy a health insurance policy as opposed to a term insurance policy, because term insurance policy you buy because you want to take care of your dependents.
In this case, it's not relevant.
It's not as relevant because obviously his dependent is his spouse, right? And he's taken care of her to a large extent primarily by having a large savings corpus, retirement corpus. And then there's us also, there is kids, right? So we take care of, obviously I'll take care of my mom as well. So his dependents are taken care of. He has no dependents. He doesn't have to provide for us, right? We have taken care of. So for him, it doesn't make sense to buy a term insurance plan. Primarily, his health insurance needs should be taken care of because he's more likely to be hospitalized. So health insurance makes sense, right? Whereas for a young chap, right, somebody who is 21, 22, 23 right now, again, may not have dependents, may have his parents, but let's suppose his parents also have a retirement corpus, no needs, etc. Maybe he could go to health. But let's suppose you are 28, 29 years old and you have a corporate health insurance policy already, you work in a corporate sector. Ideally, you should buy a personal health insurance plan, I'll get to that. But let's suppose corporate health insurance is taken care of, but you have a home loan.
Right.
You have multiple EMIs to take care of, and you have a spouse who's dependent on you, who's not working, who's a homemaker, who's taking care of your kids. For this individual, obviously a term insurance policy makes a lot more sense at this point in time.
There's far more dependence.
Exactly, far more dependence, and his health insurance needs are taken care of to a certain extent by the corporate health insurance policy. So he doesn't have to worry about it too much, right? But let's suppose he didn't have a health insurance policy or a corporate policy, then perhaps a health insurance policy also makes sense, in which case he should probably be looking at both health and term insurance policy. And this makes sense for women as well. Right? Working women who are taking care of their dependents, etc., who may have a spouse, right? For them also it makes sense, right? For you could argue that somebody who has a corporate health insurance policy should actively consider buying a term insurance policy to take care of their spouse or their dependent parents. Right, because I know a lot of female friends who probably colleagues as well who have parents, right, who need taken care of. They're still the primary breadwinner, and for them it makes a term insurance policy makes a lot more sense, right, than buying a health insurance policy, because health insurance policy is taken care of by the corporate sector. So it depends on your context, right? It depends on your age. It depends on all these factors.
Got it. So multiple interesting things you said there, but before that, if I have no dependents,
yes,
does it make sense for me to consider term life insurance? It's not required, I'm guessing.
It's not required, but oftentimes people will have dependents over the course of their lifetime.
Right.
So at the age of 25, you may have no dependents because your parents earn for themselves, they're taken care of. But maybe 30, 31, you will have a kid and spouse, and you probably will have to then deal with the consequences of having them as dependents, right? Now at this point in time, you have to ask a very important question. If I buy at the age of 25, my premiums are substantially lower.
Right.
If I buy at the age of 25, I'm fairly healthy, I have no health conditions, I have no diabetes, I have no BP, the likelihood of me getting a term insurance plan is much higher. At the age of 30, if I have multiple health conditions, I may not even get a term insurance plan.
Wait, that is interesting. So the younger you are, the healthier you are, the lower your premiums are.
The lower my premiums are, and the more chances of it is for me to actually get a term plan in the first place, right? At the age of 30, I know a lot of people who have a high BMI or who have lipid profiles that are out of line, or who have maybe they're pre-diabetic, etc., and maybe they have early onset of diabetes, and term insurance companies flat out deny.
Wait, they don't cover them?
Yeah, they don't cover them. Yeah. They'll say, no, I don't want to cover these people because they're too risky for me, right? Or your premiums shoot up like crazy. Right. So you have to pay, say, 50-60% higher.
Wow.
Right? Even more sometimes. Exactly. So if you are young, even if you have no dependents, it makes a lot more sense for you to buy a term insurance plan, simply because if I'm buying a 1.5 crore term plan at the age of 22, 23, I told you my term insurance premiums add up to 10, 12, 13,000. Think of that. Most people spend more on food and Netflix than that kind of money. Right? And you're talking about coverage for the rest of my life. Right. 1.5 crore tax free.
Oh wait. Okay, we'll get to the tax benefit.
No, this tax benefit is something that most people don't talk of, because you get 1.2, whatever this number is, right? Obviously for high earners, we have people who've covered up till 8-9 crores also, right? That 8-9 crores come tax free, right? Which means that your spouse, obviously it's not like if I'm earning 10 lakhs I can get a cover of 9 crores, because there are multiples there as well, right? But if I have the income, I can buy a term insurance plan, and that money will effectively take care of my dependents forever, pretty much, right?
Okay, two things. So one, if I buy a term insurance policy, I can get a tax benefit. This falls under 80C?
Yes.
Okay.
Yes.
The second thing is, assuming in the unfortunate event that something happens, the money that goes to my dependents is also tax free.
Yes, that is also tax free, because there's a separate provision there dealing with that. Because look, when you're buying a term insurance plan, you're assuming that 1.5 crores, the calculations you've done is under the assumption that it will take care of your dependents. You're not accounting for tax loss. You're not accounting for the 30% deduction, 20% deduction, whatever. So the government has a provision in place to make sure that money is tax free.
Pretty sweetly. So how do I figure out how much term insurance should I get? We'll get to the health later, but
So with term insurance, I think usually people use a rule of thumb. They'll say 10-15x your annual income or your annual expenses. So if your annual expenses are 10 lakhs, they'll say, you probably need 1.5 crores or 2 crores, something like that, some number. We don't like to do it that way, because oftentimes what happens is, your income doesn't say anything, your expenditure does. And even within your expenditure, you have to ask, where are you spending it? For instance, this year, if I'm getting married, for instance, I'll have a massive expense. Next year I won't have the same expense. So you'll have to average it out and see what are the necessary expenses that my dependents will probably incur even when I'm gone. Home EMIs, right? That is an expense that you can't get rid of.
Food, water,
Amenities, children's education. So you add all of these expenses together. So if I'm 30 right now, I have a dependent, and let's say they have expenses to the tune of 1.2 lakhs. I remove all the one-time expenses. I take care of all the other expenses that are recurring in nature. Now I reach a number of say 60, 70,000, 80,000. 80,000 is my expense today.
Okay.
But every year there is inflation.
I was about to ask the question.
So I add inflation and then I project it for the next 30, 40 years.
What's a reasonable rate of inflation to take in?
So let's say 5%. I think 5% is enough, because ultimately we are expecting that the inflations will moderate going forward. So even if there are high inflation years in the next few years, it will compensate. They'll average out later. So you assume that your inflation is 5%. You assume that your expenses will grow, and you could also assume that if there's a children's education, etc., you could add all of that, and then you project it for the next 30 years, and then you bring it to the present value. This is a complicated process usually, right? So at Ditto, for instance, we have our advisors doing this for customers, and we also have a tool, right, to help you average it out, to bring it to the present value. We have a calculator to do all of this. So you enter your expenses, it will explain what it does, and if you want a more nuanced approach, you can sit with our advisors, you can sit with an Excel sheet, and we will help you with it, right? We'll map out your expenses and we can project it to the future, and then we can bring it to the present, and we can see what you will need in your fixed deposit, in your bank account, so that the cash flows from there will take care of all of these expenses in the future. If anything happens to you at any point in time, right, and then you'll get a number. So that is the number we usually use and tell ki this is what you need.
So I simply just going to the insurance saying, sir, what's the maximum you'll give me, and just taking that is a bad idea.
It's a bad idea because then you're paying for something that you may not need, right? Of course, if you have the money, pay it, right? Fair enough, then that makes sense. But otherwise, if you're trying to find the best option, this is the best option, right? You spend some time, you sit with an advisor or you sit with a tool, you fiddle with it a bit, and then you'll get a number that is far more accurate.
So if people are like me and they hate crunching numbers, it's best to go with the advisor.
It's best to go with an advisor.
Few things about term.
So few things about term. It's like, the only thing that you should make sure that when you're buying a term insurance policy is you pick the right insurer, not necessarily the right product, because there's not a lot of variation products.
So how do I go?
So few ratios, few numbers, right? You want to make sure that an insurer has good settlement ratios, claim settlement ratios, amount settlement ratios. Claim settlement ratios, 100 claims, if they're settling 96 claims with term, that's a bad number. It has to be above 98, 99, right? That's the number that you need. Amount settlement ratio also, like let's suppose, simple example, I have 10 claims coming in. I settle 9 claims, right? But each of those claims are just 1 crore each. And
so
then
here the ratio considers the amount and not with the number of claims.
No, the claim settlement ratio considers the number, because out of 10 claims, if I pass 9 claims, 90%, great numbers. Amount settlement ratio considers the amount settled out of the total amount lodged, right? Claim lodged. So if I say 9 claims worth 1 crore I've passed, but there's a 1 claim, 10 crores, I've not passed. So effectively, I've only paid out 9 crores out of a potential 19 crores, right? So my number now, is at around 51% amount settlement ratio, which is bad.
So how do I look at this?
So then you have to look at the amount settlement ratio. So if you're asking 100 rupee claimed, how much was paid out?
But how is this disclosed? Can you give me an example? So how do insurance companies?
So they'll give you clearly numbers, right? So 100 crores worth of claims were lodged. We paid out 56 crores. Amount settlement ratio now tends to 56%.
I'm assuming it's bad?
It's kind of bad, right? You probably need somewhere between 60 to 80%, right? Something that is good, and so exactly. So that's another number you can look. Another thing that we tell people to look at is track record in the scale of business. Look, if I have 100 customers, very easy to maintain high claim settlement ratio. Doing it with the 1 lakh customers is very hard, right? So we look at all of these ratios, and then we look at the customer's requests as well. Some people will make for very specific requests. So they'll say, I want a brand that does this, this and this. Or they'll say, I need this in my policy, right? I need this inflation cover. Some policies offer it, some policies don't. So we'll have to recommend an insurer that is in line with their listing. Some policies will offer you, some companies will offer you a policy even if you're a freelancer with certain, proofs. Some companies don't. So then we have to go to that. Some companies will tell you if you have a health condition, then we will insure you. But other companies will say we will not touch you. Right? So a lot of things depend, right? So we take into account all of this information, and then we tell people that this is perhaps the most recommended. Some people will tell, listen, I don't care, I just need a term insurance policy, I need the cheapest premiums.
But is it worth it for me to sit and read up on all this and then come to an agent?
I mean, if you're getting it for free, and then you can evaluate it on your own, and we won't spam you, for instance, right? So somebody can take our consultation and they can buy it on their own. Right. We won't hold it against them, we won't call them, harass them, etc. We believe that this will aid us in referrals, etc. So we're okay with that, right? So then it makes absolute sense. But if you, obviously with some insurance providers, aggregators, you give them your phone number, you talk to them, and you're going to be harassed for life. So then it probably doesn't make as much sense. You should probably research yourself. In fact, just today I was reading a review for Joint Ditto saying that they were with another aggregator and they're constantly being harassed, right? So yeah, that's become a nightmare because that person was just trying to research a bit, right? So yeah, I mean, then it obviously doesn't make sense. Yeah.
So now the question of health, like even before I come to an agent, or even if I want to do it on myself, what are those, let's say, top 5 things I should do?
Yeah, first few things the same, right? What insurer I'm going with, right? Some insurance companies have terrible numbers, right? In the sense that they're terrible when it comes to claims, settlements, complaints often, etc. Yes, same ratios, but here you also have additional complaints ratio. You know, you can see how many complaints were lodged. You can see it with term also, but you don't have volume, right? Here you have a lot of volume. You can also see some numbers. For instance, you know, with health insurance companies, most health insurance companies are general insurance companies, so they do motor policies as well. So you have to remove those numbers, right? Because motor I get fewer complaints, I can settle more claims.
Issues are clubbed.
No. Insurance documents you see separate numbers for health also.
But I have to be careful enough to
careful enough, right? But with complaints, for instance, now the complaints number you can only find in the insurer's website. Right. Now this is clubbed, so you can't tell, right? And so you need to be slightly nuanced in your approach. But once you do that, the question then boils down to what do I want, right? Now, if for instance I want something that fits in my budget, I need a cover, then obviously some options are not available. For instance, we recommend insurers, we know for a fact will not dilly-dally when it comes to claims, or they're the most hassle-free insurer providers, right? Then I can tell probably go with them. But their premiums are expensive, so you can't go with them. So then suddenly it changes, right? And another thing that happens is a lot of people will have very specific requests when they're going for an insurance company, right? So they'll say things like, I need a maternity policy, I need OPD coverage, I need outpatient coverage, or I need global cover. I'm frequently traveling, I'm an NRI. So they'll have specific requests, in which case I will have to decide which insurer is best for you and which policy is best for you. So this thing changes. Health conditions also. Somebody will say, I have diabetes, then what policy should I recommend, what insurer should I recommend, or I have a critical illness, what should I do then? So it depends on your context, but largely these numbers, if you look at it and you know you're picking an insurer who won't dilly-dally with claims, you'll get a reasonable sense.
Can I increase my coverage amount?
Some policies allow you to do it, but the provision to increase is not substantial. For instance, if you buy a 1 crore plan, they'll tell you, one plan, for instance, from Max Life tells you that you can, not Max Life, I think ICICI, right? Will tell you that you can increase your cover during significant milestone events. For instance, if you have a spouse, you can increase it by a few lakhs. If you have kids, you can increase it by a few lakhs. But usually it's not enough to adequately compensate for your actual needs. So ideally what we suggest is you buy what you require right now. And if you want to boost your term cover in the future, you buy a separate plan.
So if I have 2 policies, one doesn't cancel the other one?
No. You can have multiple policies, right? Obviously, you have to declare the fact that you have another policy earlier, because the new company will want to make sure that your term cover doesn't exceed the actual value of your life, financial value.
So
right?
if I don't disclose that I already have a pre-existing term cover, does that lead to?
Yeah, it could lead to cancellations in the future, because multiple insurance companies
work
with the same reinsurers.
Right.
So basically they're trying to insure their needs, right, with another insurer. Insurance companies need their own insurers. So when they do that, sometimes they have access to, they may not have direct access to different customers, but they may have access to profiles, right? The reinsurer may have access to profiles. So the reinsurer may say, I'm not going to insure this case. So that will lead to rejections. We've had cases where people haven't declared in the past, and suddenly 6 months later they get a mail saying your policy is cancelled, your premiums, we're not going to return because obviously you lied to us. So that's it, bye-bye.
So in that case, there's no recourse?
There's no recourse because you've lied. Now you are in the wrong, right? You should have disclosed it, and that's another benefit of having an agent, right? Because, for instance, if somebody talks to Ditto and they say they're buying a different term insurance policy, they'll immediately tell you, yeah, we'll have a check in place. We'll make sure that this doesn't happen to you, right? But in other cases, yeah, I mean, we've seen people routinely find this out later and they're trying for recourse, but obviously it's your, you were asked to declare, you did not declare it because you thought, nobody will know. But insurance companies do have mechanisms for them to know what's happening under the hood.
Okay, just to summarize, the younger you are, the healthier you are, it's better to take a term insurance policy.
Yes.
One.
Yes. And a health insurance policy.
Same goes for
same
health
logic.
Yeah. Two, once you get term policy, as you grow older in life, as the number of dependents increase, as the financial value of your life increases, make sure you get another policy.
Yes.
With the caveat that make sure you disclose the fact that you already have a pre-existing policy.
Yeah. I think you can do that later in life as well. And I think that's what we would advise most customers, because there's, sometimes you get too over enthusiastic and you want to buy the maximum cover, etc. And you want to buy it like, another scam that, I wouldn't say scam, but another misleading thing that a lot of agents do is they'll tell you, okay, buy a 1 crore cover, but buy it till the age of 99.
What's the point?
Like, for instance, they'll tell you, because it makes sense, 99 tak yaar, something will happen to me, I'll die anyway. My dependents will always get the money. So that's a surefire way of making sure that my dependents will get the money anyway, no matter what happens. Okay. The flaw in this logic is that insurance companies also know that they will have to pay out 1 crore. So what do you think they will do? They will increase your premium so high. I mean, it's so high that it doesn't even make sense. Look, ultimately you're buying a term insurance plan to make sure that your dependents have money when they need it. At the age of 99, what dependents will need money? My kids will be taken care of. My spouse will also be taken care of, I'm assuming. Exactly, they don't need the money. So you make sure that your dependents have money when they need it. By the age of 60, 65, when most people turn 60, 65, their dependents will always have, by and large, right? What we've seen with our profile, audience profiles at least, is that they'll have their dependents taken care of. Their kids will be taken care of. Their spouse, I told you, retirement money, they'll have. And so it doesn't make sense to have a term plan at that point in time.
So 99 is not a good idea.
It's not a good idea. Usually the ideal range can range anywhere between 60 to 70, but even higher in some cases, because some people may say, I want to support my kids' education, right? In the case that, they need some money, etc. So maybe it makes sense. But ultimately it should not be, 99 never makes sense.
So reasonably 60 to 70?
60 to 70, because that's when most people retire and most people won't have dependents. But if you feel like you'll have dependents, maybe you can consider it, right? Because that's the only question that you'll have to answer. But yeah, this is a conversation that doesn't even crop up with most agents because they stand to gain more money.
No, I thought 99 was a good idea.
It's a good idea because, yeah, obviously you get money at no matter what, but obviously you end up paying a lot more premiums for somebody who doesn't need that money.
What's the right number for health? So how do you feel?
Health, again, right, you would ideally say that, listen, 1 crore is really good. Okay. Because if I have 1 crore, all my expenses are taken care of. Right. But this is also a bit of a misnomer. Okay. Because here's the problem. Most health insurance treatment, we've settled so many claims right now. The maximum claim that we've settled, right, is probably 20-25 lakhs.
Embarrassing admission, I think when I was speaking to one of the Ditto advisors, I said, for health, I said, what's the maximum they'll offer? I said, let's take it. Then one of your agents.
So our agents will tell you that perhaps, 10, 15, 20 lakhs is very good, right? It covers most use cases. Obviously, it will never cover all use cases. For instance,
maximum claim was X amount. I'm sorry, I missed
that. It was around 20-25 lakhs, right? It's a recurring basis, right? On a recurring basis, it was 20-25 lakhs. But usually, treatments in India at least don't cost that much, right? What ends up happening is, in the earlier case, I said there is a black swan that you need to take care of. But what ends up happening is, even if you buy a 10 lakh plan, 10 lakh comprehensive plan, here are the benefits you get. You get a no claim bonus. Actually, now it's not even no claim bonus, it's cumulative bonus. So every year they'll give you 5 lakhs extra.
Oh, they just adds to it.
They just adds. So go
on. Just to say, if I start with a 10 lakh policy, there's no claims in year 1?
No, even if there is a claim within 2 years, some policies now easily give you 50%, 100% and 50%, and then within 2 years you will have,
So my policy also has inflation adjustment.
It's not even inflation adjustment, it's actually better than inflation adjustment. Inflation adjustment is separate cover, right?
I had a follow-up question, but please go on.
They also have a restoration benefit. Restoration benefit, let's suppose you have a 10 lakh policy. You make a claim for 4 lakhs. Next claim, if you want to make, you will still have 10 lakhs in your kitty. The only use case here you can't cover for is if I get a single claim of 20-25 lakhs. then obviously you can't use the restoration benefit. But otherwise, if it's multiple recurring claims, then you can use the restoration benefit. So when you're buying a 10 lakh policy, you technically get 20-30 lakhs worth of benefit. So that's actually good enough. Now, some people say, no, I want extra protection. Fair enough. Maybe 20-25 lakhs. That's good enough. Right? Now, who do we recommend the 1 crore plan for then? Why is the 1 crore plan exist? Let's suppose you want to have a planned treatment outside India, a treatment that you will only avail outside India.
Wait, just to be clear,
yes,
Indian policies cover treatments outside?
Some policies do. They'll say they offer global coverage, they come with conditions.
Okay.
They're very expensive also, right? Some of these policies easily cost you 1.5 lakhs in premiums. Right, but the upside is that if you can afford those policies, then you can say I'll buy that policy, and then I will get a global cover also. If I have to avail a cancer treatment, state-of-the-art treatment in the US, then I can do it. The only caveat is that most of these claims are done on a reimbursement basis.
Oh, you pay first and then get the...
So you have to have 1.5 crores in your kitty to pay first, which makes it slightly problematic, right? So ideally, when we recommend, insurance policies, health insurance policies, we recommend a cover of anywhere between 10, 15, 20 lakhs. You want to go higher, you can, but ideally it covers most use cases that we've seen, right? So you're good enough. Now, some people will say, no, 5 years from now, I don't want to be in a position where I want to increase my cover, and insurance company says no, because I have some pre-existing health condition. Fair enough. And that's a valid use case. You can buy a 20, 25 lakhs, 30 lakhs, whatever you're comfortable with, you can buy it. But if you don't want to cover for it right now and you don't want to pay high premiums, this is a good sort of, reasonable premium to pay.
So in case of health, let's say I start with 10 lakh a policy today.
Yes.
Can I increase it every year, or rather pay extra and then increase?
Yes, you can. There is a provision, but there will be a health check. So they'll make sure that everything is good and then they'll offer it.
But you can do it.
You can do it. And the premiums here, with term insurance, they don't change. With premiums, when health insurance keeps changing. Right? Every year it keeps changing with inflation. It can change depending on age bands. So let's suppose my risk that I've assessed is for 20 to 30 years, 30-year-olds. As an insurer, I see the risk profiles largely similar. So I'll say same price. But after 30, I will say, listen, you have to pay 30% extra. Right? So my age bands, if I go from 30 to 31, or say 35 to 36 sometimes, I will see a sudden bump in premiums. It's not happening because of inflation, it's happening because the insurance company has decided that people within these age bands, they fall with a certain or under a certain risk type. So this is the premium that I'm comfortable charging. And those premiums will usually be 20, 30, 35% extra. And suddenly you see a bump.
What, in terms of, let's say I move from 20 to 30, I can reasonably expect a 30%, 35% increase in premiums?
No, so usually let's suppose the band is set between, so let's suppose you are say 32 right now. 35 to 40, there's a separate band. So easily if you're moving from 35 to 36, you'll suddenly see a 30-35% bump, right? Just because of that.
Bands are uniform? Are they set by the regulator? Or
no, insurance companies, right? So they decide. And you'll also see increases due to inflation. Sometimes insurance companies will price a policy at dirt cheap levels. So they'll say only pay 10,000 premiums for like a 25 lakh policy, right? And they start turning a loss. And then they can sit with the insurer and reconfigure the pricing structure. So some policies we've seen people come to us and say my policy premiums increased by 60%. It's probably happening because the insurer decided the price structure that they've instituted for the policy doesn't make sense anymore. So they've rejigged the entire structure, and you're seeing the effects play out.
This is like my cashback going away.
Yeah, pretty much, right? The cashback goes away suddenly and you're like, what happened? Well, this happened.
Most people, one, of course, don't have insurance. And of the people that do, it's probably they're covered by their employer.
Correct.
Is that enough?
That's a very good question, because I think with corporate insurance, you think that, there are no waiting periods. Insurance, some people have robust covers as well. They'll say everything is covered. It's an open-ended cover, no rejections, it's great. The only point that can happen is, we've seen cases where people get diagnosed with some critical health condition. I've heard of a very terrible case where this lady was diagnosed with cancer, and she was obviously laid off because she couldn't show up to work, and she lost her employment health cover and she has no protection. She had to pay everything out of her own pocket, and then that obviously crippled her financially, right? So oftentimes what happens is people think about their employment as a consistent thing that will never change. But sometimes you switch companies. Sometimes you choose to be an entrepreneur, right? You don't have health cover in the early days. Or sometimes you choose, you want to work, but you can't work because of physical condition and you can't do anything as well. At which point you definitely need a health insurance policy.
Wait, let me pause you right there. So you said one thing. So I'm currently employed.
Yes.
I change my job.
Yes.
My cover goes away. There's no portability or any of that.
No, you can port to a retail plan. But that also is incumbent on a health test. So if you have health conditions, insurance companies can say, no, we are not going to extend a retail plan, so you go uncovered then.
So retail plan means I am buying an individual policy as an individual policy holder by paying the whatever premium.
Yes, those are retail plans usually, right?
In that case, is there a waiting period? I'm guessing for term there's no.
No, I mean that depends again, right? If you had a health policy and you've already had it for 2 years under your employer, the insurance company can choose to waive off the waiting period.
There's a lot of it depends in this.
Everything it depends, right? The insurance contract is usually 60-65 pages thick.
Right.
And I told you, font size 9-10. Right. So there's a lot of caveats, and obviously most people forget about understanding what's in the contract. They can't even name the policy document, what insurance policy they have. Some people can't even name their insurer. They know they have a medical claim policy and that's it.
I feel seen, but yeah. Please.
Yeah. So I think there are a lot of ifs and buts, and in this case also.
So if you're employed, don't assume that you'll be employed forever. Make sure you have a individual health policy.
You should, right? I mean, it depends. Again, if say for example, I can't spare, I'm living paycheck to paycheck. I have no extra money to spare, right? Fair enough, then you probably don't need a health insurance policy, right? But if you have the provision to buy an individual health insurance policy, you should buy it, because there may come a time when you need it and you can't be insured anymore.
By the way, so if I have a corporate cover, health cover, and if I have an individual health policy, does my corporate plan act as like a super top-up?
Not just a super top-up, you can use it any way you want, right? With super top-up, you have to make sure that you pay the first 5-10 lakhs. Here, you have no provision. If you want to use your corporate cover for the first 5 lakhs, you can do it. And afterwards, if you have only 5 lakh corporate cover, and you can use the individual cover 5 lakhs. So you can do it as when you please, right? You don't have to worry about deductibles, which is the first 5 or 10 lakhs that you have to pay yourself.
So this is not a complicated question. If you have a corporate cover, the reasonable choice is to just get an individual policy.
Yeah, just get an individual health policy for 10 lakhs or something like that, and then you're covered from all sides, right? Yeah.
There's something called as a super top-up policy or something like that in health.
Yes.
What does this policy do?
Yeah.
And when should I buy it and when should I not buy it, more importantly?
So most people, I said, want a 1 crore cover because they think that will cover everything, and they buy a policy with a cover of 1 crore. But this is much more expensive than the other option, which is you buy a policy, say with a cover of 10 lakhs, and then you buy a super top-up policy. Now, super top-up policy says something like this. They'll say, for the first 5 or 10 lakhs, you pay the bills yourself, because that is the problematic bit for me. I told you, as an insurer, right? As an insurer right now, if I'm insuring you, most claims I know are under 10 lakhs, right? So I have to pay more often than not. I have to pay the claims that are less than 10 lakhs because they are the ones that number so high, right? More than 10 lakhs, very few claims I get. So an insurance company will tell, I'm going to give you a policy wherein if the first 5 or 10 lakhs you pay yourself, I will pay whatever comes on top.
So that means if I buy let's say a super top-up 50 lakhs.
Yes.
So what's the average range that I'm supposed to pay out of my own pocket?
So basically that is something that you can choose yourself. It's called a deductible. So you will say, you know what, I can pay 5 lakhs out of my own pocket because I have another insurance plan that does it. But beyond the 5 lakhs or beyond the 10 lakhs, right, you pay everything else. And the insurance company, right, now obviously they're not paying the first 5-10 lakhs, so they have to offer a discount. They'll tell you that I'm going to sell this super top-up policy at such a ridiculously low rate that you will feel enticed to buy. So for instance, super top-up policies right now sell for as less as 2,000 rupees per annum. So effectively you get 50 lakh 1 crore ka cover. For a young person, right, from a 25-year-old, no health conditions. You get 1 crore ka cover, super top-up policy at what, 2,000, 3,000 rupees in premiums. So now you're thinking that's a great deal. But like I told you, it's a great deal only if you can afford to pay the first 5 or 10 lakhs yourself. And how will you do that? You buy another policy. So you buy a separate base policy totaling 10 lakhs, right? You buy that policy, you call it a base policy. That will cover the first 10 lakhs. After that, you can use the super top-up policy.
At the risk of stating the obvious, the super top-up policy makes only sense if you have another base policy.
Yes, and also, now people will ask, okay, which is cheaper? 1 crore direct policy I buy, no super top-up, no nothing, 1 crore policy cover, right? Or should I buy 10 lakh a policy and then 50 lakh a super top-up policy or 90 lakh a super top-up policy? This depends. In most cases, the second option is cheaper, buying the super top-up plus the base, right? And the reason why it's cheaper is because super top-up policies are generally not comprehensive. What that means is, if I buy a 1 crore cover for a comprehensive policy, right, I'm going to get everything covered in that, in the sense that I don't have to pay extra for certain rooms that I take. If I want to stay in a presidential suite, I can say, No issues, because most comprehensive policies come with no room rent restrictions. If I need modern treatments, then I can pay for that also, because most comprehensive policies cover modern treatments. Whereas super topper policies will say things like, listen, I'm not going to cover modern treatments. Listen, for pre-existing diseases, my waiting period is 4 years. Comprehensive policy will say 2-3 years, right? So they come with additional caveats wherein they're not as comprehensive and they're cheaper also, right? So if you have the money, then probably you should buy a 1 crore policy directly, right? Where you pay the extra money and you're like, okay. But if you want to save a little bit of money where you're thinking, listen, I'll stay in a single private room, no issue. I don't need no room rent, I don't need a presidential suite. Or you will say something like, listen, I don't need modern treatments, regular treatments are enough. I'm okay with that. Then you can buy a super topper policy and a base cover. That will make more sense because it's cheaper for you.
But for most people, I'm assuming super topper plus a base cover gets the job done?
It gets the job done, yes. By and large, it gets the job done.
It's
a reasonable choice to make. It's not something that we would not encourage, It's something that I think people can try, yeah.
Got it. Wait, so just to recap, a base policy with maybe 10 or 20 lakhs is a reasonable starting choice. If you want higher coverage, you buy a super topper policy. Yes. Assuming that you are good enough with a reasonable degree of care.
Yes.
And in some reasonable hospitals, not the best in everything.
Yeah, I mean any hospital, but not in the most expensive rooms, right? Yeah, you're going to stay in a single private room. Some people say, single private rooms in some hospitals are terrible, right. In which case you'll have to reconsider, right? Yeah.
Okay, it's also a function of your income, I'm guessing.
Yeah, because for the first 10 lakhs it's okay. Anyways, it's covered, so you can stay in a expensive room.
So for a base cover, let's say 10 to 20 lakhs, what's the ballpark price I'm looking at?
Again, depends on your health conditions, depends on your age, right? If you're young, if you're 25, no health conditions, you'll get a comprehensive policy for 10-12,000, right? You can even get it cheaper, but then again, oftentimes when you go lower down the premium chart, you run the risk of not having your claim paid out. Right? I mean, there is that balance that companies have to strike. So 10-12,000 for a reasonable policy, 25 years old, I think gets the job done, right? Even with a family, if you want to cover an entire family, again, 15,000, 18,000, right? That's what we usually see. If you have health conditions, this number changes. It can go up to as high as 100% of your premium amount, right? Depending on your health conditions. Mostly it goes up by 30-40%, diabetes, health, BP, all of that. But yeah, I mean, depends on your health condition. Yeah.
I mean, that's an incentive for people to stay healthy by taking care of themselves also. Yeah. Like, what do I need to know in terms of, if I am a young person wanting to buy a policy for health policy, like what do I need to know in terms of maintaining good health records so that one, my policy gets issued, two, my claims don't get affected?
So technically you don't need to maintain health records to provide it to the insurer. But generally what happens is, if you had a debilitating condition in the past, say 6 years earlier, etc., then offering these records will expedite the process of application.
So
for instance,
it helps in the claims.
It helps in the application. The claims, it will help simply by virtue of you having disclosed the condition. Now let's suppose I've had tuberculosis, a very bad case of tuberculosis a few years ago. Now I disclose it to the insurer saying that this was a bad episode. The insurer will demand documents to assess whether I should give you insurance or not. The application, right? Now during the application it helps because if you had records, you could clearly show that this was a non-consequential. It was not an issue at all. And you can expedite your application. During the claims, what helps is the fact that you were honest in the first place. You talked about your tuberculosis, and so there is no debate. For instance, let's suppose you had say a mental health issue. Right? You had a mental health issue for which you sought diagnosis, you had psychiatric treatment, you did the whole 9 yards, right? Now you bought a policy, you did not disclose it, right? But let's suppose you have a claim, 2 years later you have a term insurance claim, you unfortunately pass away. Now the insurance company will do a very thorough investigation to make sure if you've had any pre-existing condition in the past. They'll speak to your colleagues, they'll speak to your friends, family, to eke out any information that they can.
Wait, they'll speak to my friends and family?
Yeah. Term insurance companies may that happens. Even health insurance may, there are, a lot of these companies have forensics departments that, I'm pretty sure they're not called forensics, but they have a department, right, that does a lot of this work, right, just trying to find out if you were honest with your disclosures.
What did you call them? Insurance CIDs?
No, it's insurance CIDs, right? I mean, that's one way to describe these people, but they'll go to extreme lengths. They speak to the treating doctor sometimes. So let's suppose, one case that often comes up is cirrhosis of the liver. So insurance company, health insurance policies are not required to pay out claims if the disease is caused by substance abuse. So alcohol, smoking, etc. Now the question is, how do you decide what is caused by substance abuse or not? If I get lung cancer, how can you confidently say that it was because of smoking?
Interesting question.
It's very hard. It's almost impossible. So with lung cancer you can't. But cirrhosis of the liver, you know for a fact that it's either a genetic condition or maybe you've had other issues or it's because of alcoholism. 90% it's because of alcoholism, right? Now the question is, how will the insurance company know whether it is because of alcoholism or something else? The insurance company will usually request a letter from the treating doctor asking if this was a result of alcohol abuse, because the patient has to be honest. The patient will be honest.
Can I pay off my doctor to scam?
Some people do, but then what happens is if the insurance company reaches out to the doctor directly, they're not going to put their medical practice at risk for you. They're going to be honest. They're going to tell, listen, I did not know about this. This was cirrhosis of the liver, you deal with it. And then your policy gets cancelled. You won't get the claims, nothing. So the premiums that you paid also goes to waste.
Another scam call.
Yeah.
We'll have to figure out scams by the time.
It's very hard because the thing is, the scams business, insurance companies have been in business for over 100 years, some of them. They've learned, there's 100 years of history for me. Exactly, and suddenly a customer comes and says, I'm going to defraud the insurance company. You have no experience, right? You're no match in some sense, right? So it's very hard to do that.
Got it. So that takes care of the documentation question. The other bunch of questions, they're all broadly around, I'm young, should I get a policy?
Yeah.
At what age should I get a policy?
Yeah.
I'm young, but I don't have a regular stable paying job. I'm a freelancer. My income is not regular, it's lumpy.
Yeah.
So basically around this entire question of when do I get a policy? And does the nature of my income matter?
So for term insurance, it does matter, right? So for term insurance, if you're a freelancer, etc., and you don't have a steady source of income, it becomes exponentially harder for you to get a policy.
What are the numbers we're talking about?
Some freelancers don't get it at all until you have a steady, stable income, because insurers can't judge the value of your life. That is the problem.
So entrepreneurs don't get covered?
Some of them don't. Some of them can show that they have a company with certain cash flows, etc. They can prove that they have stable income. They can show past salary slips. It's at the discretion of the insurer, right? So, for instance, in some cases, we work with the insurer to establish credibility, right? We show that this individual has a steady source of income. It's just that for a brief period it's been lumpy, etc. And sometimes they'll accept it, sometimes they deny it. So yes, if you have lumpy income, if you have for freelancers, etc., it can be harder. It's not to say that they never get it, but you have to work with the insurance a little bit.
Should they give up on trying to get a policy?
I don't think they should try giving up because sometimes even the most hardened cases we've seen that there is a workaround. Right?
So with enough back and forth by
you can, but there are some cases where you can't immediately, right? You have to wait for some time. You have to go through a few things, a few hoops, and then probably, right? So,
but if you're a freelancer, please don't think it's the end of the world, and make sure that you at least
you assess your options, right? You assess your options.
Got it. I want to stay on the misselling bit a little because I come from the other non-insurance side, which means like I can easily say at least 3 or 4 interactions in a given week somewhere on social media in person would be this cases of misselling. Where, and at least on social media though, I can see at least 4 or 5 cases where some person walks into a bank saying that I want to open a locker. He comes up with some useless policy. Or there are also this disturbing cases where if your parents are elderly and they probably don't have the ability to figure out what's a good product or a bad product. They typically get missold by anybody. It could be intermediaries, banks, so on and so forth. Like how bad is this? One, it's a 2-part question. How bad is this misselling problem? What are we talking about? And 2, if I am a young person, I'm planning my finances today to ensure that my dependents are taken care of and my own protection is also taken care of. Like what are those things I should keep in mind so that I don't get missold and I only buy the protection that I need? So one, how bad is the...
Yeah, so it's bad, but not for the reasons that most people think.
Right.
Because most people think insurance companies and these agents are out there to defraud you, cheat you, etc. It's only partially true. There are people who do that, but most of the people that I've seen generally, right, in the insurance industry are people who truly believe that this is the best alternative available for you.
It's also their ignorance.
Yeah, their ignorance, because they think that this is the best product there is. They know 3 products. They've understood those 3 products really well. They've seen the returns projected on a sheet, on a fact sheet, and they think that is the truth. When in reality, that fact sheet is probably projecting a return rate that will never happen. You'll never get that kind of money. Right? But they've been led or misled to assume that this is true, and they're probably going to say the same thing to customers as well. So the misselling is there primarily because it's very lucrative to make money off of insurance, A. So you will have some people trying to make the most of the situation. But there's also the fact that these people actually truly believe that these are the best alternatives. Right? ULIPs are the best alternatives, endowment plan, savings plan are the best alternatives, when in fact there are better alternatives. Right? That is not the best alternative. You still end up saving a lot of money. And even if you consider the best ULIPs, the best endowment plans, right? You can still make better returns simply by separating your investments and insurance. Right? So there's no doubt about that. So misselling happens for two reasons. One is because there's a lot of money in insurance, and it's pervasive because most people believe that this is the best alternative available. Most agents truly believe that.
That's a sad state of affairs.
It is. And how do you make sure that, say,
You're
not getting caught in it, right? One thing to do is, if you're buying a ULIP or an endowment plan, you go buy it. If you truly believe that this will give you the peace of mind, you go buy it. But before you do that, make sure you take at least 2 days. 2 days. Just give yourself 2 days to try and see if you can understand the fact sheet. If you cannot understand the fact sheet, if you don't know what you're investing in, I would advise that the best alternative is to reach out to somebody who can help you understand it better. Because if you reach out to somebody who can read that fact sheet, they will probably tell you that there are better alternatives.
Shameless plug for Ditto.
No. That's all you need to do. Right? You don't have to spend a lot of time. You don't have to think through it. Because to be honest with you, if I read a fact sheet for a say a ULIP, I would also be probably confused because there's so many numbers and and not just that. If you see most of these documents, they're written in font 9, font 10. Okay, they're written packed in a manner that you're not able to understand. It's deliberate in some cases. They can simplify it if they want. They can simplify the language, etc. But they don't do it simply because it's very. Most people don't want to read it, and they know that the best way to make sure that nobody reads it is to pack it in a document that is dense, that is thick, that is unreadable to the most part.
So I was alluding to it before we started recording. So a colleague of ours, his friend had gotten one of these LIC policies or whatever. So then I had absolutely no idea. Like you said, I couldn't figure out if it was a good deal or a bad deal. I mean, of course, I had to calculate the IRR, but it wasn't obvious. So then I spoke to somebody that we had, one of these rainmaker portfolio companies, and he helped explain it. So he was saying apparently the IRDA, even though they have mandated like a disclosure sheet with all the important points that you need to know and the percentages, because like in most instances of misselling, if you see those fancy PDFs, there'll be zero mentions of percentages. Because people, it's very easy to fool people when you say whole numbers. Like you pay 1 lakh a year, after 10-15 years you get X lakhs. I'm thinking in terms of absolute numbers and not really percentages. If I go to percentages, it becomes abundantly clear that it's a scamming policy. But coming back to this case, he was saying, even though there are regulations mandating that the IRRs, etc., have to be disclosed, most of the agents or most of the intermediaries don't follow this. They end up creating their own PDFs out of two reasons. One, like deliberate intent to mislead people, or in the second case, as you mentioned, they don't probably understand the math. And when we actually sat down and calculated the percentage returns on this, so this person wanted to get rid of after, I think, year 1 or year 2, which means his surrender value would probably 0. And the second thing, even if he stayed invested till the end, he would be probably making 6% or whatever. I mean, in the current interest rate scenario, he would be getting 8 to 9% even in FDs. So, I mean, it's like you said, the typical material which comes with most of this, both policies, like insurance plus this thing, it's just is
hideous. And
it's impossible. No, and also I think it's not just impossible to read. It's also based on projections, because let's suppose an insurance company is now promising to invest your premiums in equity instruments. There's no way they can actually tell you precisely how much money they can give you at the end of the tenure, right? Say 10, 15-year tenure. So the only thing that they can do is projections. So they can project it at 6%, 8%, 10%, 12%, whatever it is, right? And if they're going to project it at 12%, when in fact the actual returns may not be that much, you're again misled, right? Up 3 years, okay, 10 years, maybe you can project 10%, and I would buy that is possible, right, in the Indian equity markets. But if you're doing it over 3 years, suddenly then you have to rethink your assessment. And most people don't understand that it's projected rates. They think it's fixed rates even though it's variable.
That's another thing. And
in this, coming back to this example, this person was sold, I think he was saying that 9 or 10% was the.
Yeah,
I mean, it's the odds are. I mean, if you are watching this, even the equity market, if you put 100% equity, it's very unlikely that there's this notion in the markets that Indian investors have this God-given right that you'll get 12, 13%. It's not. It's nobody knows.
Yeah.
So the one obvious takeaway there is don't go by the numbers and don't take them for granted saying these are guaranteed.
Yeah,
these are
yeah.
projections, and projections means they can happen, they can't.
Yeah, so one of the things that we do at Ditto, right, even when we are selling health and term insurance policies where the outcomes are much more clearer in terms of, the payouts, etc. Because if you have a 10 lakh policy and your bill adds up to 2 lakh, 3 lakh, if you've disclosed everything earlier, you've gotten the policy, there's very few chances of insurance companies actually rejecting the claim. You get the 2-3 lakhs. The outcomes are much more clearer. Where in fact, say, even then, when we recommend policies, etc., we tell people to take a few days, a couple days, right, before they buy the policy. Even if somebody wants to buy it instantly, we tell them, listen, you go through these policies, you go through these brochures, better understand it. If you want to consult with other people, maybe you should do that as well, and then you should buy a policy. Simply because that way you'll make a more robust decision, right? If you're simply jumping the gun and saying, oh, listen, I'm going to get 8-9%, that's probably not prudent, especially considering you're going to make a commitment of say 10-15 lakhs. Right? Say 15-year policy, if you're going to pay premiums of 1 lakh every year, right? It's a massive commitment. And if you're going to make that kind of commitment, I think it's fair to say that you spend at least 2-3 days speaking to some people, trying to see if the math that you've been sold, right, by the agent, by your relative, whoever, right, is actually true. If there are hidden conditions, right, instead of signing on the document immediately.
But in your experience, do people spend time deliberating on
No, they don't, right? Because look, it's almost like a sales pitch that needs to be closed as soon as possible. So you're under pressure because now you have a relative in front of you. They want you to sign on the dotted sheet as soon as possible. They want to make their targets, so they're going to pressurize you as much as possible. And every time you want to delay, they think you're now ruining the relationship, right? So it ends up in that sticky zone where you don't have enough time to understand the document very quickly. And once they're in your home, you want to finalize it, they want to finalize it as quickly as possible. There is no going back.
No, that point you said about relationship is funny because I've heard multiple stories from my own relatives saying that I only bought it because he's a relative and I had to buy it.
Exactly. And that's true for most people. But once they realize the amount of losses they're making in just protecting this relationship, maybe they'll reconsider. Right? It's because they can't quantify the losses adequately. Right? If you go to a financial advisor or even go to Ditto and you ask them, can you probably give me some insight? Right? They'll probably give you some numbers that'll put into context how much you'll potentially save. For instance, my dad, who had invested, actually, the funny thing is he invested some 5 lakhs. He got around 4.5 lakhs at the end. So he didn't lose money on that ULIP. Right? Not bad. But one of the reasons he got that money is because even though he ended up investing only 2.2 lakhs or something like that, because the rest of the money was, I told you, allocated for the death cover, for the death benefit, right? So that money obviously is gone. So only 2.2 lakh was invested. The equity market doubled almost. So he ended up getting 4.4 lakhs because of the equity market, right?
Luckiest outcome possible.
Exactly. But if he had invested, because he was only looking to invest at that point in time, he had a lot of his retirement savings. He was looking to make a bit of extra money. If he had just put that money in, say, equity markets or even an index fund, he not just more, right? He's lost. We're talking about 3-4 lakhs in, lost savings here. Right? I mean, if I told you your relationship is now costing you 3-4 lakhs, I'm pretty sure people, in India, people have done worse for that, right? I'm pretty sure they would reconsider their position. Right? It's just about quantifying the exact money you're losing by pursuing this alternative versus pursuing something else. You put that number, you clearly define that number, and suddenly people will reconsider it. But unfortunately, nobody can because of these projections, the dense documents, and nobody has the patience to go through it, right?
Got it, but
so before we get to the other questions, I think you said, which is probably the most important takeaway from this entire conversation, which is never mix your insurance and your investments.
Yeah.
Explain why. Like, what's the logic there? And also, even when I'm separating those, what are things I should keep in mind?
No, I mean, it's quite simple, right? When you separate it out, you pay less fees, right? Even the best, savings plans in the market have fees that don't beat fees in the regular investment and term insurance sector. For instance,
you're saying mutual funds plus.
Yes, mutual funds. Let's suppose I buy a simple index fund.
Got it.
Right? What are the expense ratios like?
Maybe 20-30 basis points.
Yeah, exactly. So you're talking about what, 0.2, 0.3%, right? term insurance plan, you directly pay only for the death benefit, nothing else. So there are no frills, right?
So term insurance doesn't have any expenses.
No, I mean,
apart from the premium you
yes,
pay.
yes, the premiums that you pay, right? The first year premium that you pay, some of it will get divested to, say, if there is an agent, etc., they get paid out commissions, which you get even regular insurance
But
plans,
that
right?
doesn't still affect my cover.
No, that doesn't affect your cover. You get the cover, right? So that premium is only for the death benefit and nothing else, right? So it's only the death benefit here, and there are no extra charges associated with investing that money, nothing.
Got it.
Right?
So just to be clear,
Yeah.
I buy a term insurance policy, I pay an annual premium.
Yes.
No other charges. I get my cover which is promised. That's it.
That's it. You get that cover. There's no extra this thing,
Got it.
right?
Please continue.
Now, with the investment component, right? Again, you have to ask yourself, what can the insurance company do that I can't do myself? The insurance company will also take your premium and invest it in government securities or equities. They don't have some specialized access to, in fact, more often than not, if you compare the performance of fund managers in insurance companies, you will see that they've underperformed Nifty. They've underperformed the index funds, right?
I'd
And-
actually done some numbers, very quick numbers. It's
Yeah.
just like in equity mutual funds, then the underperformance numbers are anywhere between 70 to 80%.
And if it's government bonds, you invest. But you invest in fixed deposits.
So that's the other thing which kind of is funny. So I don't know who mentioned this. So in typical endowment policies,
yeah.
so you give the insurance company money.
Yes.
And I don't know, I don't hold me to this, but the number is approximately 80-90% of the money goes into safe government bonds.
Yeah. I mean, depends on the kind of insurance
But
policy
roughly,
as well. Yeah, let's
mostly it
suppose.
goes to insurance. So somebody had outlined is saying that if you are taking, if the insurance company is investing in government bonds that give you, let's say, 6 to 7%, how can they actually give you higher returns?
No, it's
than
not
that?
possible. I mean, that's the thing, right?
I mean, when you framed it like that, it actually like went up like it was a light bulb moment in my
Yeah.
head. But
Sorry.
No, they can't, right? They have to invest it in places that you have access to as well.
Right.
And if they are doing it on your behalf, they're going to take a higher charge, right? They're going to have a fund allocation charge, fund management charge, etc. Right? Now, some funds say that they don't have these charges and they're trying to remove it, etc. But even with those funds, if you calculate the actual IRRs, right, the actual rate of returns, you will see that it's best. It's best. Like I remember somebody actually pointed out a plan, a savings plan, which had very little cost, like no frills, no administrative charges, nothing. And even then, when you calculate the returns, right, it's still best to invest your funds separately, right? You buy a term insurance plan, you get a higher cover, which you don't get here. You probably get 10 lakhs, 20 lakhs, which is not worth your life. And then you also get the added benefit of investing your proceeds wherever you want with more flexibility, with no additional charges, or say the expense ratio that is usually associated with it, right? So you make more money. There's no doubt about it.
so let me just break it down. So if I'm buying a term insurance policy, the thing I'm buying is pure protection.
Yes.
I die, my
Yes.
nominees get this thing.
Yes.
And you are saying instead of bundling policies,
Yes.
like in an endowment policy or ULIP,
Yes.
so ULIP is called as unique linked investment plan, where the insurance company promises you the best of both worlds. You get a little bit of investment and also a life cover. The life cover, as Shrehith has been alluding to, it's not enough.
Yeah, it's not substantial. It's not going to compensate for your life. Let's just put it that way.
So now,
What you're saying is, I buy a term insurance policy for the protection, then I take my money and put it in mutual funds.
Yes.
So this comparison between investment and protection is for term plus this thing. The health doesn't come into the picture.
Nothing,
Health
nothing.
is separate.
Yeah.
So now you're saying the best way to go about this, take that money, investment money, put it in equity mutual funds or any
Yes.
decent mutual fund,
Yes.
and then buy a life insurance policy. So the combined charges of this will be far less than.
Yes. Even the best plans in the market, combined plans, I think, even then, right? If you do it separately, you will still end up saving more money. You will get a better life cover, and it's the most optimum use case for most people. Now, some people might say, you know what, I don't know where to invest my money, right? But that doesn't mean you give that money to an insurance company, because insurance companies are not the best. I mean, they're not the best at handling funds. I mean,
something is not better than nothing.
Yeah, I
It's
don't.
better to take time and
Correct.
decide.
It's better to take time. It's better to probably, because look, even the simplest things that you could possibly do, right? Even something like a direct investment in one of these index funds, right? I think even those outcomes beat most of these funds. I mean, there's no doubt about it. So when you look at it from that perspective, it makes more sense for you to spend some time just to figure out where you're going to invest your money, as opposed to simply buying a ULIP or an endowment plan, savings plan, right? So
I had a revelation. I was asking you
Yeah.
before this.
Yeah.
So ULIPs, I think the first generation ULIPs were horrible.
Yeah.
By a mile.
Yeah.
I think the recent ones, in spite of the changes, they're still bad.
They're still bad as in, like I said, it's relatively bad, right? Like for instance, if I gave you two options and I said, look, you could probably make 4.5% here, 4.4% here, all things remaining equal, the 4.5% is still better, right?
So what makes them bad? Is it the fact that they have expense structures which are hard to understand, hidden charges, complicated charges? What are we talking about here?
Simply
So this is with respect to ULIPs. I'm sorry.
Yeah, with all insurance products, right? One
right,
of the most, even when people are buying health insurance,
right.
one of the most common complaints that we get is the premiums are too high. One of the reasons why the premiums are too high is because not enough people buy insurance.
Correct.
If everybody bought insurance, the premiums would be far lower for individuals, simply because now I can distribute the risk among a larger set of people, right? So I don't have to pay as much money, and basically, and one of the reasons why nobody buys insurance is because they think it's a scam as well. We'll get to that, right? Health insurance, etc. Why they think of it as a scam, and why it's probably not as much of a scam as most people think.
Got it.
But therein lies the problem.
Right.
Not enough people buy insurance, which means that insurance companies now have to spend a lot of money selling insurance.
Right. So if an insurance company is selling insurance products,
yes.
so it has to obviously cover for its risk.
Yes.
Because it's insuring a lot of people.
Yes.
So
yes.
you are saying, if more people buy insurance, the insurance company gets to spread the risk across multiple people.
Yes.
So even if a big cohort of the people suddenly has some adverse outcome, the insurance company is still covered because it is diversified.
Correct.
Sorry. So I don't think a lot of people.
A lot of people. No, you're right. And to make sure that a lot of people are covered, they have to spend a lot of money in selling the insurance policies. So for instance, if nobody is buying insurance, I have to pay a lot of money to the agent, people like Ditto for instance, right? They pay us a lot of money in terms of commissions because nobody buys health insurance from them directly. So they're like, can you sell it to people? Can you spend money on marketing? Can you market your services, etc.? And you can sell insurance policies. And so a lot of the premiums that you pay, a significant chunk, goes in commissions to agents like Ditto, for instance.
So what are the numbers? Like
so for instance, if you're buying a health insurance policy, right? At least now there are no caps, but previously 15% of your premiums immediately gets turned to commissions, right?
So 15% of every premium I pay every year?
Not every year, right? Renewals there are separate commissions, so it could be 15 to 20%, right? There are caps, and then insurance companies can offer extra rewards, etc. But a sizable chunk of your premiums immediately gets diverted to agents because insurance companies simply can't market the policies themselves.
Nobody's buying it.
Exactly. It's almost like an advertising marketing cost for them, right? They have to pay these high commissions to agents because insurance companies find it hard to sell these policies.
So that means, dumb question, this increases the premiums.
Yes, this increases the premiums, right? So even in the context of, for instance, when you're talking about endowments and ULIPs, right? Perhaps it's easier to sell as opposed to a health insurance and a term insurance premiums, but still, the charges are slightly higher simply because now I have to pay an agent to sell it. Now think about mutual funds. On say, Kite, right now if I'm buying an index mutual fund, Zerodha is just, marketing the fund and it's free, right? And I go buy it directly without any intervention.
So I'm sorry, it's free to buy, there's a small expense.
Yeah, there's small expense. Exactly, indirect floods, right? So now mutual fund companies don't have to pay as much. Right, so they don't have to spend a lot of money on marketing, so they can keep their expense ratios low, which means that now I can directly buy the mutual fund and I incur a lower charge as a consequence, right? Whereas with insurance companies, I have agents who need to be paid. My costs are higher as an insurer, right? So I'm going to pass on these costs to my customers, higher premiums, right? So customers end up paying higher premiums. That is why you have these charges, right? That is why they are more expensive. They're more expensive by virtue of not enough people buying insurance, which means that insurers now have to pay agents, and that cost is ultimately passed on to customers.
So if I'm buying a policy, it's for the greater good. I'm helping other people.
In some sense, yes. I would still presume that most people would not be wanting to participate in this.
I didn't think of this effective altruism angle.
Yeah, but that's what happens, right? It's a chain reaction, right? And most of these insurance companies are not like completely in the green as well, right? Some of these insurance companies make money. Some of them are still in the cusp of probably making a little bit of money.
And even after all these years.
Yeah, even after all these years, right? It's not like insurance companies are some of the best stocks you can pick.
I thought this was a good scam for insurance companies because I'd be swimming. I thought they'd be swimming in money.
Yeah, because they still have to spend a lot of money in selling insurance.
I don't know if you know this number.
Yeah.
Like, what percentage of an insurance company's revenues goes to commissions? Any broad numbers? Would you know?
If I had to guess, right, I think.
Random guess.
Yeah, probably. I think right now the cap is at 20-30%, I guess. So you have to keep all your administrative expenses under 20 to 30%. I'm not sure if it's 20%, 30%, but the IRDAI rules mandate you to keep your expenses under check. So all your administrative, marketing, everything, right? You have to keep it under 70% has to, whatever money you make has to be set aside for risk, right? Covering your risk.
Well,
Yeah.
this is not a money-making scheme.
It's not. There's not a lot of money for insurers either. Yes, agents make some money, but even then also, like I said, it's hard to sell insurance, right? It's hard for insurance companies. It's hard for people like us also. But ultimately, if you're advising it to customers, right? If they have a better alternative, they should pursue it. So the better alternative here, the better cost structure here is if you are looking for protection, risk protection, something happens to you, death benefit you need, it's better to buy a term insurance. Like for instance, think about it. I'm an agent right now. I stand to make more money from selling endowment plans, savings plans, and ULIPs.
Terrible policies, but
Yes, terrible policies, but I stand to make money, right? So technically, most agents would sell these plans.
Why are you guys not selling, by the way?
One of the reasons because we are under Zerodha's umbrella, and we try and make sure that we try and do right by customers, right? And I think that's a long-term strategy that we are trying to play.
terrible sales pitch.
It is a terrible sales pitch, but we are
I'm joking.
but we are hoping that in the long run at least that will sort of put us in the good books of because it's like I said, how can you sort of market yourself as a brand in this industry? If you're doing the same thing that everybody else is doing, you can't stand out, right? So for instance, even our no spam policy. And one of the reasons why we adopted is because every insurance company is known for spamming, so we're not going to spam.
You're saying you guys don't spam.
Yeah, no, we
What's wrong
don't.
with you people?
Yeah, I mean, it's harder to sell insurance again, right? If you don't spam. If you don't call people 5 times, they don't end up buying policies. So we leave, say, 30% of our revenue on the table, just because we don't call multiple times or we don't follow up aggressively, etc.
This is another impossible question.
Yeah.
I mean, we know the thousands of products. I don't know how many, like there are thousands of products. in
Yeah,
this.
I mean, there's about 150 health insurance products, over 150 health insurance products. Term insurance products, about insurance products, maybe 40, 30, 40.
And we're still talking hundreds.
Yeah.
So how do I go about making a choice, be it with term or be
Yeah.
it with health?
Yeah.
Apart from, like, the reasonable choice is get an agent.
Yeah.
That takes care of the
Yeah,
problem.
yeah.
But even in that case, I think it's just my personal view in
Yeah.
the sense it's still good to know a few things
Yes.
so that you could ask your agent the right
Correct,
questions.
correct.
So in terms of choosing policies,
Correct.
when I'm in the process, what do I need to know? Let's start with term.
Yeah, with term, it's fairly simple. Term is a commodity, right? You die, insurance company pays out.
Right.
There's not a lot of variations that companies can offer. I mean, there's very little complication there, right? Death is final. I mean, nobody can debate whether diseases they can debate, right? Death you can't, right? And in fact, that also is a funny question. Maybe I'll take a small
I knew
segue.
you'd have a scam.
No, because you know what? Even with death, let's suppose you go missing.
Right.
So then, what happens, right?
I have no idea.
Yeah, so that's an interesting thing. If you go missing and there's reasonable grounds to believe that there was a threat to life, etc., then there is a provision for you to get the claim paid out, even if you are not officially pronounced dead.
What the
Right?
hell?
Exactly. So it happened in the Malaysian MH370
Right,
case,
right,
right? So the plane went missing.
Yeah,
You
yeah,
don't know if they're dead. I mean, they're most likely dead, but you don't know. So then the government, or say, for example, the investigation agency can pronounce that these people are likely dead, and the insurance company can then pay out.
But you need to get a certificate.
But yes, usually there is a certificate involved, and this depends on police stations, court records, etc. Right?
So another scam gone.
Yeah, so it's not as easy to sort of get a claim. In most cases, they'll file a missing persons report, and they'll only pay out the claim 7 years afterwards, because that's when the presumption of death kicks in.
I'm a consumer. I want to buy a policy.
Yeah.
Now, what are my options? So where do I go? One is offline agents.
Correct.
One is online platforms.
Correct.
Now, if an offline agent is not selling you pure term,
Correct.
pure life, or pure health, most of the other products are probably bad for you.
Yes,
So
yes.
which means most of the agents probably aren't selling the good policies, I'm assuming. It's not good to make generalizations, but I'm saying there's a lot of misselling there.
There is a lot of misselling, but I think a lot of people, it's not to say that a lot of people simply, they're trying to sell the policies that make the most commissions, because they also know that, because these are built on relationships, right? There are people who don't want to sour these relationships. So they're trying to do the best they can. it's not always like they're trying to push the most expensive policies because they know their customers as well, right? They'll be very upset if I pay 15,000 premiums.
I mean, the relationship breaks.
Exactly, right? So there is that aspect. But yes, there are people who will aggressively upsell if they think that they stand to make more money. Right?
So the second option is I go to the N number of online platforms
Yes,
I
yes,
have.
yeah.
Now with this reality,
Yes,
there's
yes.
offline agents who, the odds are you might get a terrible policy.
Yeah.
Online platform, I have no idea how it is.
Yeah.
If I'm a consumer,
Yeah.
reasonably educated,
Yeah.
probably don't know a lot about investment,
Yeah.
insurance.
Yeah.
Now, what are the odds that, like in the sense that how easy is it to go and buy a decent policy in this insurance ecosystem?
Technically, I mean, theoretically speaking, it's very easy. Like you buy mutual funds, you should be able to buy insurance directly as well.
Right. Wait, there are direct plans in insurance?
There are direct plans that insurers have mandated, the regulator has mandated for insurance companies to sell it, right, directly on their platform. But the difference is not substantial, right? In most cases, you get probably 5% of your first year premiums deducted, right? So if you buy directly from an insurer, you get a 5% discount in the first year, and then you may not get that discount afterwards, right?
What's the comparison with buying through an agent, for example?
So buying through an agent, you may have to pay that 5% higher. Or some agents, for instance, will sell, I mean, although theoretically it's not possible, insurance companies will still make it accessible through some agents.
Right.
So technically, with most agents in India, insurance companies, insurance agents in India, you don't end up paying extra whether you buy from an insurer directly or an agent.
There's no difference.
There's very little difference if there is any, right? In most cases, there is no difference,
Got it.
right? So you can buy through an agent directly or you can buy through an insurance directly. Now, if you go to offline agents, maybe there's a 5% markup, right? In most cases, offline agents will have a 5% markup, but with online insurance aggregators, right? Like Ditto or say Policy Bazaar, if you buy, I think you will get same price, or you probably will get a 5% discount from the insurer directly. Now the question is, should I then not, by the same logic that I employed earlier, buy from the insurer directly?
Right.
100% you should.
Right.
If say for example you meet these conditions. And what are those conditions? The first condition is, let's suppose you understand what policy to buy, you've done your research, you can spend say a month or say a couple of weeks just trying to understand insurance, and you want to decide, you know exactly what you want to buy, and then you should probably go to the direct insurer. But herein lies the problem when it comes to comparing mutual funds and insurance.
Right.
It's not as simple as just going online and just saying buy.
Which is probably what most people would do.
Yes, because here what happens is once you start filling out the application, you'll realize there's a lot to go through. For starters, there's a lot of very tricky questions.
Right.
The are questions like, are you somebody who drinks alcohol? And there's no subtext there.
Right.
Now let's suppose I'm somebody who drinks alcohol, say once in 6 months. Am I somebody who drinks alcohol? Or let's say somebody who drinks once every day. Am I somebody who drinks alcohol? So now insurance companies will specify, okay, if you drink 100 ml every week or 50 ml every week.
That's actually
Exactly. And then suddenly there are more questions, right?
Right.
Okay, what if I've drank, what if I used to drink 50 ml, but now I don't drink? Or even with smoking. Have you smoked in the last 12 months?
Right.
Yes, passive smoking, active smoking. Well, once I smoked, but so many questions.
Yeah.
Then there's the medical test that you have to go through, right? So when medical tests happen, again, insurance companies come through, they have to coordinate with you. Sometimes they don't show up.
Right.
Sometimes your application gets stuck. Once the medical is done, they have to evaluate the risk associated with you,
Got it.
right? Okay, I've said that you're going to have to pay 10,000 in premiums, but that is assuming you're healthy. Now some conditions show up.
Right.
Okay, what do I have to do now? Do I have to submit documents? Do I have to liaise with the insurance company? So this process of buying is not instantaneous at all.
By the way, this sounds like a nightmare. I mean, I know having personally, like what's the average turnaround time from the time a person comes to the website or Ditto Advisors and the time the policy?
So with health insurance, I think the average turnaround time is 3-4 days, right? We try and sort of minimize it to say 1 day or 2 days, sometimes instant policies. I mean, we try and work with insurers. With term insurance, it can go up to 2 weeks, 3 weeks also, right? Yeah, it can take a lot of time, and it can take a lot of back and forth with insurance companies.
Is it because there's more money at stake?
There is more money at stake with term insurance because they have to make sure that if they're paying out 1.5, 2 crores, they have to be absolutely sure, right, of everything, right? Health insurance, it's not as cumbersome, so they are like, okay, they can afford to take a little bit of extra risk. But this also is not as challenging. I can still, my point is, you can still go to the insurer directly, save the 5% and say, I'm going to deal with all of this, because that's what I would have done myself, right? But the last bit of this angle, let's suppose you now have to make a claim. The insurance company is going to design the contract in such a way, the insurance document that nobody's probably read, in such a manner as to prevent any outcome when it comes to paying out claims. So they'll have a multitude of conditions. There's a lot of grey area within the insurance document. So they'll make sure that they reduce their payouts as much as possible by designing the contract in such a way that if there is a grey area, they can defend their position.
Wait, that's an interesting point. So it's not in the insurance company's interest to pay
out
claims.
Exactly. So
it's their job, it's not
their interest, right? But when it comes to an agent, it's in their best interest to keep you in their good books. So they'll do everything in their power to go out of their way to pressurize insurance companies as much as possible.
But there's another incentive there. So repeat business is good for you guys because you get to make
Exactly, right? So for us, the incentive is to have customers on our side. Right. So we will go to extreme lengths. So just to put into context, every day we handle about 3 or 4 claims. Right. Now, in most of the cases, we can simply negotiate with our insurance partners because of the leverage that we have. Right now, for instance, right, we book say 100 policies, right, for a certain insurance company. Now they don't want to lose that business. It's not like I'm doing them a favor. I'm selling these policies because I understand that these are some of the best policies available to my customers. So I'm doing it. But once I do it, insurance companies know that I have a lot of leverage now. So what I'm going to do is every time they deny a claim on flimsy grounds, if they say, listen, the doctor's report right now is not clear, so I'm not going to pass the cashless claim, somebody from my team will shoot out a very aggressive email to the insurance company stating that if this continues, we will have to reevaluate our partnership.
These nonsensical things happen.
These things happen routinely, right? Insurance companies will always find the most, in fact, once an insurance claim gets denied, we first write to the insurance company through informal channels. Then formally we raise a complaint. Then we go to the grievance cell of the insurance company, we try and raise a complaint there. If that doesn't work, we finally go to the insurance ombudsman. So almost like a third party arbiter who decides who's in the right, who's in the wrong.
So this is a regulated
regulatory body.
Yes, it's a regulatory body that the Insurance Regulatory Development Authority of India has instituted for settling disputes between customers and insurance companies and agents also.
So just to be clear, so if I am a customer, for whatever reason my claim gets rejected, I think it's wrong.
Yes.
How do I go to it?
So first you have to raise a official complaint in the grievance cell of the insurance company.
So on their website or
Yes. And if they don't respond within a set specified period of time, then you can raise the complaint to the insurance ombudsman, and the insurance ombudsman will try and arbitrate the matter. They will also check the veracity of the claim. If the claim, if they believe holds good, if it satisfies certain conditions, they will admit the claim, and then you will have to represent your case in front of the insurance ombudsman. This is what a regular customer has to go through if they want their claim processed.
No wonder people don't take insurance.
This is one of the reasons why I think it's perhaps prudent to consider an agent when you're buying an insurance policy as opposed to a mutual fund.
And the interesting point you mentioned is, because you're probably one of the largest platforms, you guys bring considerable leverage in the sense that even if the insurance company jerks around the customer, you guys can...
because we can negotiate with the insurance company directly, because what we are going to tell them is...
I think that's a very underappreciated point which most people...
And another thing is, we've gone to the ombudsman maybe, around 10 times, say, for instance. I don't know the exact number, but we've gone to the ombudsman to represent our cases in front of the ombudsman. In 50% of the cases, the insurance companies have not even represented themselves. Basically, they're saying this claim had no grounds. We simply tried to see if we could do something. Now we evaluated the case. We don't want to represent. We'll just pay the claim.
So the logic there is the insurance companies are betting that the customer won't go to the ombudsman.
Precisely, right? So this is what insurance companies do.
Right. So once they don't show up in ombudsman, that means the claim gets approved?
Yeah. Then they have no grounds, right? So they have to approve the claim. Disclose everything.
So is it reasonable to say disclosure is good for you? All disclosure.
All disclosure is good for you. You disclose as much as possible. Right. If you don't get an insurance, many people be like, I won't get an insurance policy if I disclose it. Okay, you won't get it. But what is the point of paying premiums for 3 years and then finding out that the insurance company has rejected? You paid 3 years premiums to the insurance company for no reason. Right. Might as well get rejected right now and save those 3 years worth of premium, right?
Do we have any numbers as in the number of claims that get rejected because of
a pre-existing condition? Yeah, I mean, I can share the numbers that we have, right? So for us, about 50% of the cases get rejected because of a pre-existing condition or during what is called as a specified illness period.
But does it also include bad disclosures? But I mean, you
No,
guys
no, no.
don't have bad
So,
disclosures.
no, very few bad disclosures. So this considers disclosures made, but they are in that waiting period, 3-year waiting period, and during which the insurance company will not cover, right? But then this is something that most people are aware of, saying that we won't get, any claims passed for those 3 years if I have a pre-existing condition. What most people don't know is there's also another 2-year waiting period for what is called specific illnesses. So these specific illnesses are things like cataracts, ACLs, etc. So I'll give you an example. How could I potentially defraud an insurance company right now? Let's suppose I'm trying to, make as much money as possible through an insurance company.
Interesting question. Go into as much detail as
So,
possible.
so
please.
let's suppose I now have an ACL problem.
Okay.
I have an ACL problem and I require surgery. Right now, most people with ACLs, let's suppose before surgery also, it's not like they can't walk at all, right? Now, what I'll do is I'll go to the insurance company, I will buy an insurance policy, and I will tell them, listen, I have nothing, I want to buy an insurance policy, a 5 lakh cover, and I pay 10,000 in premium, 12,000 premium, whatever that money is. 1 month later, I get my ACL surgery done, saying, listen, I have an ACL problem now, it will cost whatever, 1.5 lakhs for the surgery, you pay.
This will go through?
This will not go through because insurance companies know that this happens. So what they've done is they've put out a list of diseases generally where you can delay treatment.
Right.
Things like cataracts. Cataracts also I can delay treatment. Some stones also, like some kidney stones, obviously immediately I need procedure, etc. Some cases you've identified it, you think you can deal with it, so you'll wait a month and then you'll buy a policy and then you'll make a claim. Right? So to prevent this, they have a list of diseases, say 40, 50 illnesses, they put in this bracket and they said for 2 years, we will never cover these illnesses, no matter what happens. After 2 years, we'll cover it. Because that's generally the period where we know you can't hide it forever. ACL,
So my scam fails.
Yes, scam fails. So you can't cover an ACL for 2 years, right? You could probably do it for a few months, right? At some point, you'll realize I need to get the surgery done. So a lot of this happens. But here's an interesting case. This is again where an agent comes in. We've had a case recently where somebody fell from the stairs. They got an ACL done, and they filed for a claim. He bought the policy. The gentleman bought the policy 5 months ago. But I told you that ACLs, cataracts, etc. are only covered after 2 years because they fall under the specific illness. Now, the customer did not know this. The customer thought, okay, because it's specific illness, my claim will get rejected. But here's another clause that insurance companies have in their fact sheet. They say that all accidents will be covered, no matter what happens.
So this probably, if you're done it on your own, if you bought the policy on your own, you probably
wouldn't know. So we wrote to the insurance company saying that this is an accident.
But the insurance company's first impulse is to reject it first.
Yes, they reject it, right? So we said that it was an accident, this is what happened, we fought for the case and immediately it got covered. And this is not just for ACL, dental treatments. I was reading about a case in the insurance ombudsman fact sheet, they noted a case, very interesting case. The dental treatments are not covered. Basically what they say is insurance companies will say we are not going to cover dental treatment because it's discretionary. What that means is if I have crooked teeth right now, I have crooked teeth, and I could go to an hospital and I could probably tell them I need to get braces, very expensive. Right. It could 1.5 lakhs also, right? I could get the insurance company to pay, and they're like, you're perfectly fine with the crooked teeth. Why do you need it, right? So they will say that all cosmetic dental procedures are rejected. However, if I have an accident and my jaw is disfigured and I need procedure, surgery, then the insurance company is liable to pay that claim, right? So what happened in this case was the gentleman had oral cancer. Okay. After oral cancer, the treatment was done, etc. He had a policy, and he went to the doctor to get
reconstruction.
Yes, reconstruction surgery done. Now the reconstruction surgery is technically a cosmetic procedure.
Of course.
However, this was born out of an accident, which is cancer, right? Which he had no control over. So he had to go to the ombudsman, and the ombudsman finally decided that technically, based on actual terms, yes, reconstruction is cosmetic procedures. However, we have to consider the context surrounding the reconstruction. This was only done as a consequence of the cancer procedure, and that is why it's not like he's just doing it, right? Obviously, it affects his quality of life right now, right? And then it was, so there's a lot of gray areas here. It's not just about, oh, this is covered, this is not covered. There's a middle ground where you need somebody, an agent, or say a lawyer in some cases, right, to help you, right? And that's what we do with our clients. Yeah.
My God, this insurance sounds like a nightmare.
No, it is a nightmare, right? And I understand. That's what I mean. We were talking about scams. Mostly people think health insurance and term insurance, any insurance products are scam, legitimately, because insurance companies deny them routinely. Right? They feel like it's a scam. You pay premiums for 5 years, 10 years, and then you find out that the claim is rejected. Obviously, you're going to feel miffed.
It's an interesting tension. It's in your interest to get the claim approved. It's in their interest to get the claim rejected.
Yes.
Which means
So you feel miffed, and I completely understand. Which is what we're trying to do with Ditto as well. And we're trying to mitigate these cases as much as possible, because a lot of the mitigation happens before you buy the policy. Honest disclosures, etc. And most people say that, oh, you know what, I heard about a case where my uncle was denied an insurance policy because the agent that sold him the policy offline did not know about all of this. They said, oh, listen, I'll just, in fact, I've known cases. I mean, now there's mandatory KYC checks if you're buying health insurance. Before, that never happened. So people would enter wrong ages. They would enter 55 instead of 65. Because 65 the premiums are higher, 55 the premiums are less. Because you know that your client will only purchase it if it's lower premiums. So you feel. Yeah, it happens. In fact, this used to be a massive popular scam that people used to run, agents used to run. And then 5 years later, your claim gets rejected because your age is not the same as the one mentioned in the Aadhaar or your other document, right? Identity documents.
It seems like an obvious thing, but
yeah. Most people, they never know. They don't check their application because the agent filled the application for them.
Short-sightedness.
Yeah. One of the things that we see with claims is, insurance companies usually deny their health insurance claim by talking about this reasonable and customary clause.
Does it apply to term also?
No, just health insurance, right? Because what they're saying is, if you're going to a hospital and your medical bills are not deemed reasonable enough, then we are not obligated to pay the full cost.
Who decides what's reasonable?
Yeah, so that is a very interesting question, right? Because the IRDAI regulations state that any cost is deemed reasonable and customary if this is the standard rate card that is prevailing in that area for that specific type of illness. For instance, if in our area, right now we're in JP Nagar, if in this area you go to a hospital, you have a cataract procedure done, and in most hospitals the cataract procedure costs say 60,000 rupees, right, for one eye, or 45,000 rupees for one eye, then that is deemed to be just and reasonable. That is deemed to be the reasonable cost. But let's suppose you go to a hospital, they use some fancy equipment, they use multiple attendants, and they inflate the cost to 1.2 lakhs, 1.3 lakhs for a cataract procedure. Then the insurance company can say, look, these costs are inflated. These are not costs that are generally we see in other hospitals. So we are only going to pay 60,000. The rest we are not going to pay. So insurance, so as a customer, you feel like, look, I had no role to play in this. If the hospital decides they need these people, then they need these people. Now, sometimes insurance companies are justified because they'll say, look, attendants, etc., you had multiple attendants, you used a procedure that was too complicated, simply you inflated the cost, we are not going to pay. And you could argue that yes, insurance company has a point because the hospital is trying to cheat them. But in some cases, there is no such debate at all. For instance, we had one gentleman come to us who is a cataract procedure only, and I think the bill added up to 95,000 for a cataract procedure. Now, I agree that this is usually much higher than the standard rate, right? But the point of this was the treatment that was accorded to him was done so because that gentleman had a very specific medical condition. So he had to go through something called as a femtolaser treatment, which is generally more expensive. Now, this was the doctor's call. Now, this was the doctor's call, making sure that he took care of the well-being of the patient, right? But the insurance company is like, no, we have not seen this, etc. So what we did immediately was, look, this is justified. We're going to get a letter from the treating doctor saying that he had a medical condition to justify this, and then we're going to send it to you. Now you deal with this. So once we sent it, the insurance company realized that we are not going to let this go. We're going to go to the ombudsman if they don't pass the claim, and then they pass the claim. So this kind of thing keeps happening, not occasionally, frequently, which is why perhaps for most people it makes sense to pay a little extra, even if you're buying from an agent, simply because you will have someone on your side when you have to make a claim, because that's the ultimate point of an insurance.
Otherwise it becomes a case of penny wise pound foolish.
Exactly. That's what happens. And I told you, right, with most policies, even this price difference doesn't exist. So you're paying the same price with the insurer or with the agent, might as well get the benefit of having somebody who will actually fight for you, right? So out of the 4, 5, 6 claims that we receive every day, at least 2 we dispute. Right, or at least the insurance companies dispute for some reason. Sometimes it will be like, look, we are not going to process a cashless claim, meaning we won't settle it on our end. You pay the bill right now and then we will reimburse you, right? Which can also be painful for some customers. And if that doesn't happen, then reimbursement, we do something, right? We make sure that all the documents are provided to the insurance company so that they have no reason to deny the claim. So the most important role an agent can play in the whole value chain Obviously applications, etc., coordination, they help, but primarily it comes with a claims business.
When it counts.
Exactly, when it counts, right? So that is why perhaps it makes sense to pay that extra 5%, or whatever that extra fee is when you are buying an insurance policy, because unlike mutual funds, you need somebody on your side.
Absolutely. Got it. No, even in mutual funds, you need a financial.
Yeah, sometimes, of course, right?
This new thing is called as zero cost policies.
Zero cost term insurance plans, yes.
What are this and does it make sense? What do I need to know?
Technically, they promise, term insurance policies at zero cost, but as everybody knows, there is no such thing as free lunch. It's not zero cost. What it means is you can buy a term insurance policy, and then if you forego the policy at some time in the future, the insurer will decide exactly when you should forego the policy.
What does foregoing mean?
Foregoing means you say, I don't need the plan anymore.
Okay.
So you say, I don't need the plan anymore, and you're just done with it, right? If you do this at some point that the insurer deems fit. So imagine you bought the policy till 60 years.
Okay.
You're 25 years, 21 years, let's say. You bought the policy 60 years. Insurance company will say that you have to forego the policy between 45 and 50.
Okay.
Right? If you do that, we'll give all the premiums that you paid us in full.
Wait, in a zero cost, am I paying premiums?
No, you pay premiums. That's the thing. You end up paying premiums. You have to pay premiums, obviously. Otherwise, you don't get an insurance plan.
I thought zero costing
No. That's the trick, you see. You pay the premiums, and then they promise to return you, excluding the GST and the other costs, riders, etc. They don't pay.
If you give up the policy right when the odds
You probably need it, right?
Yeah,
or maybe when you need it, you have to give it up, which doesn't make sense for most people. Yeah. But the upside is that you don't have to pay anything extra to avail this benefit. Most policies offer this without any cost.
So technically every policy is a zero cost policy.
You can, if they have the benefit attached to it, right? So you can just opt for it.
Got it.
And you don't pay anything extra. There's another clause called the return of premium option.
Oh, this is those
endowment
policies.
Yes. No, so basically here what happens is, you at the end of the policy term, after 60 years, you've held the policy till 60, you want the policy till 60, then they'll return all your premiums. However, in this case, your premiums will be substantially higher. So it doesn't make sense, because if you add the extra premiums and you see how much you get at the end of 60 years, inflation adjusted.
Best to keep it simple and just buy a simple term insurance.
Get on. You don't need a return of premium. Zero cost also, it's not something a lot of people use, but there's no downside, so it's like, okay, maybe you can.
I remember seeing some number like 30-40% of Indians have diabetes. Can diabetes be covered under health insurance?
Yes, they can be covered, but it depends on how bad the diabetes is as well, right? If you have type 2 diabetes, usually insurance companies will cover. In fact, there are specific policies designed for diabetic patients where companies will tell you we'll cover these diseases from day one. Okay. Usually, if you have a pre-existing disease, there's a waiting period. Right. They'll tell you have to wait for 2 years, 3 years before we cover diabetes and any disease related to diabetes. Okay. If you have complications arising out of diabetes, we won't cover that as well. So you have to wait for 2-3 years. Right. But some policies will tell you, listen, you pay a higher premium. Right, you buy this policy and we'll cover diabetes and diabetes related complications from day one. Hypertension also, sometimes asthma and other conditions also, but there is that provision. But some cases of diabetes insurance companies won't cover. For instance, if this diabetes is coupled with other health complications, or let's say uncontrolled diabetes, or let's say type 1 diabetes in some cases, right? Insurance companies will say this is too risky, we will not cover this, right? Some policies will cover. So again, agents like ourselves help in this matter, because then we can query every insurance company. We can ask them if this is available, if this policy is available, maybe you can make this available. If we share the patient profile, their medical history, etc., can you cover them? Right? And then insurance companies will say yes, no, sometimes we can work with them, sometimes we can't, right? So this depends on specific cases, but generally yes, it's available, and it's best to probably buy a policy before you contract diabetes, because your premiums are less.
Right. Dumb question. In most cases, you can alleviate the effects of diabetes by making lifestyle changes, so on and so forth. So assume that I made certain life changes.
Yes.
My health, let's say, increases a little bit.
Yes.
In that case, does the situation change for me in terms of which insurer covers me?
Yes, because I'll tell you, it doesn't change in the sense of which insurer will cover you. Okay. It changes in the sense of whether now it is a pre-existing condition or not. Okay. Let's suppose your diabetes is under control and you're not taking any pills. Right. You're pill-free, you're not considering anything, etc. Now you go to an insurer, you tell them, listen, I want to buy a health insurance policy. Okay. Question is, will you have to declare the diabetes as a pre-existing condition? Right. The answer to that depends on when you got the last medical diagnosis for that condition. The regulator states that if it was before 48 months, 4 years, right, then you don't have to disclose it.
So a medical test is a blood test or whatever.
Yes, usually they'll do a blood test, and let's suppose the tests are normal there, no diabetes, etc. But you said you had diabetes earlier, right? Yeah, now you don't. Now it's under control. Now all my HbA1c levels, blood sugar levels are under control, and suddenly I have to decide whether I have to declare this as a pre-existing condition or not. That depends on this one caveat, whether the last diagnosis for that medical condition was done before 48 months. If it was not before 48 months, you have to disclose it, and it's up to the insurer to decide whether they have to then deem it as a pre-existing medical condition or not, even though the blood tests have returned normal. So this is another caveat, another interesting thing, right? So you have to disclose it, because then insurance companies can say that, let's suppose 2 years later, you are again, you buy a policy, you did not declare it. Right. You go to the hospital, you file a claim, and you say, listen, I have this condition, bill adds up to 2 lakh. Insurance company will have to look at the claim and now decide whether they have to pass the claim or not. Now the insurer, you think, okay, how will they know about my past diabetes? Blood tests were normal, nobody said it. Yeah, I did not declare it, I don't want to declare it, they don't know, I don't take pills, how will they know?
The other question is interesting. I mean, there's a growing awareness about mental health issues and conditions like depression. I mean, does health insurance cover mental health issues?
Yeah. Health insurance companies are legally obligated to cover these costs, right? So long as they're inpatient hospitalizations. So for instance, let's suppose you're diagnosed with a health condition. However, you get a psychologist, you go to counseling, you probably need therapy, and then maybe you also visit a psychiatrist, but you're never hospitalized, right? So these are all considered outpatient costs, right? Outpatient costs are generally not covered, right, by most insurance companies, right? And
I sense a but in the
no, but as in most people want these costs to be covered because they are the nominal expenses that you incur on your day-to-day basis. Right. You're not always hospitalized, but you do visit the doctor, and you want these costs covered. But the trade-off here is that if you're buying a policy that covers OPD, outpatient costs, you almost always have to pay much higher. Like for instance, let's suppose you have a policy without OPD cover, right, that comes in at 10,000 ka premium. With OPD cover, it will come in at 15,000 ka premium, but they will tell you that OPD costs are only covered up to 5,000 rupees. So effectively, they're asking you to pay the money upfront so that then they can disperse you in the future. So I mean, it may not be at that extreme, but usually if you look at the trade-offs, it doesn't always make sense to buy the OPD plans, simply because they're expensive to a point where you could have paid out those costs yourself.
There's no distinction.
There's no distinction, right? So it doesn't always make sense. And this is true with maternity also. Maternity costs also, you'll see that most plans that offer maternity benefits are expensive and they come with limits. So they'll say we'll only cover up to 50,000. But the costs themselves, the premiums themselves are up by say 4,000 or 5,000 rupees, and they'll force you to buy a family floater plan, which means if you want to buy an individual plan, you are then forced to buy a combined plan with your spouse, because only then the maternity benefit will be available. This way, they're forcing one of you to claim maternity benefits even though you'll never claim maternity benefits. Men don't claim maternity benefits.
So you just end up paying for nothing.
You end up paying for nothing, so that these costs then add up, right? So if you see the costs over a period of say, and they'll have waiting periods also. They'll say 3 years we won't cover. So 3 years you pay premiums, extra premiums for nothing. So you end up paying 25,000 extra in premiums anyway. Right, and yes, you could argue that I'll get 60,000-70,000 ka benefits, but then you'll be paying the extra premiums forever, perpetually, until you decide that okay, once I have my maternity benefits covered, once I have my kid, and then probably I'll shift to another plan that's a cheaper, right? Then maybe it makes sense.
Right. So I want maternity benefits.
Yes.
I get a plan with maternity benefits. So which means I'll probably end up paying higher premium. So let's say I have a kid.
Yes.
My maternity benefits, it doesn't go away. I'll still keep.
No, you'll still have it. You won't claim it, but you'll have to pay the higher premiums.
So which means I'll have to be cognizant saying that.
Yeah, you have to port out or you have to switch or something like that, right?
So
At which point
is possible.
that you can do, right? That you can do if you have no health condition and there's no extra charges associated with it. You can do it, but it's just too much of a hassle to figure out, and you're not sure if you'll actually get the benefits also, because I told you there are caps with maternity, right? It makes sense financially, but going through with it, etc. I mean, for most people, we tell them unless you know for certain that you're having kids soon enough, maybe it doesn't make sense, right?
So even in that case, it's better to maybe just pay those expenses out of hand.
It does, right? The only caveat here is that newborn expenses, right, are not covered for the first 60-90 days, which is crucial. Right? Then you can get them included in your insurance plan, free of cost, but those 60-90 days are crucial. So maternity benefits, when they're tagged along, they cover newborn costs as well. So that makes sense, right? So if you have the money, obviously it definitely makes sense to go for it. It's trade-offs. So it makes sense to buy a plan, right?
Got it.
Yeah.
So just to make it clear, so if I have, let's say I'm facing some general anxiety or
Yes.
issues.
Yes.
If I'm just going to a therapist,
Yes.
so that
Cost is not covered.
No,
by
it's not covered. If you're hospitalized, those costs are covered. However, if you disclose these conditions to the insurer, and you must disclose these conditions to the insurer,
I'm assuming they won't cover you.
they may not cover you, right? Yeah, they may not extend the policy, right? So that is a catch, yeah.
Makes sense.
So the other question was, if I've had some serious
Yeah.
procedures done, maybe an open heart surgery
Yeah,
or
yeah.
maybe a cancer surgery,
Yeah.
maybe I didn't have a policy before.
Yeah.
If I want to get a policy, will I get a policy?
Yes and no. It depends on the specific condition. For instance, let's suppose somebody's had an open heart surgery.
Right.
Now, there are policies specifically designed for such people, but I told you the trade-off. The trade-off is that the cover may not be comprehensive. So they'll say something like, we'll offer you a cover of up to 2 lakhs, 3 lakhs, but the premiums are 40, 50,000.
And they probably won't cover another heart condition.
They probably say heart condition is covered, but then they have specific waiting periods, 4-year waiting period for other things, etc. So they come with a lot of catches, right? Even for other conditions, it's the same thing, right? So if you're diagnosed with a critical illness and you want to buy a policy afterwards, your chances are very slim that you'll get a comprehensive health policy.
Whatever you said about people not getting health, the people that
Yeah.
need health insurance the most not getting the policy now makes sense.
Yeah, it makes sense, but that's the catch.
I understand.
22 as well, right?
I mean, insurance.
Yeah, for insurance companies,
Yeah,
like
they're
let's
not made of
suppose
money.
I was speaking to somebody who was very angry, aggressive in fact, when they found out that they were not getting a policy, right, because they had a critical disease, and they were very angry, etc. But think about it this way, like, let's suppose they do insure you, right? Now they know for a fact that they'll have to pay out massive claims, right? And they do it with multiple other people also. Their expenses increase disproportionately. How do you think they're not going to go bust? They're simply going to increase the premium for everyone else. So other people end up subsidizing those costs.
One way or the other, they'll get their.
Yes,
this thing,
they'll
which
get their
means-
premiums, right? So it becomes expensive for everybody else.
Right.
And for a lot of people, insurance coverage suddenly becomes exclusionary because now it's too expensive for me to buy a policy. It may become too expensive, right? And so the trade-off is that you're not going to get a policy, but effectively if you got a policy and everybody else with critical illness got a policy, that may price out so many other people, right? So that's the trade-off here, right?
By the way, I forgot to ask the most important question,
Yeah.
the smoking question.
Right.
So I'm buying health insurance or term insurance.
Yes.
I'm a smoker.
Yes.
So two scenarios.
Yes.
One, I am a smoker. I was a smoker.
Yeah.
In terms of disclosure, what do I need to keep in mind?
Right, you have to tell them when you smoked, when was the last time you smoked. I think you have to be as honest as possible because if you've smoked in the past 30 days, there are ways for insurance companies to actually figure out if you've actually smoked, right? But the reason why we say it's important to disclose it because let's suppose you're buying a term insurance policy. If you're a smoker, your premiums increase by 30-40%, right? And you may think that that's too much, right? But if you don't disclose it, let's suppose a claim does go through. Because the regulation is that after 3 years, claims become non-disputable according to regulations with term insurance policies.
So if I was a smoker 3 years ago,
Yes.
and now the point is moot because do I still have to disclose?
No. So there are a couple of things, right? So let's suppose you're a smoker. You want to buy a policy. You're a smoker right now.
You have to disclose which is clear.
You have to disclose it.
Right.
Generally, that's good practice. But let's suppose you don't disclose it.
Okay.
You buy the policy, 3 years pass, right? And then, unfortunately, something happens to you and now the claim has to be paid out.
Right.
Legally, according to the regulations, there can't be any dispute because the insurance company is expected to find out if you were a smoker or non-smoker in those 3 years.
This is an interesting
Yeah,
loophole.
so technically they can't.
Right.
However, that doesn't mean they can't go to courts. They can still,
So then one way or the other makes sure that.
they can do it, right? If they truly believe that there is evidence. And how do they have evidence? They have entire departments just trying to figure out. They'll speak to your family, they'll speak to people, They'll scour through social media.
CIDs.
Yeah, we've seen cases where people scour through social media to see if you've smoked, etc. If you can establish, right? And if they can establish it, there are grounds for them to deny, right? Within 3 years. Even after 3 years, I told you, they can still sort of harass you. So generally, it's good practice to disclose it. But let's suppose you smoked 6 months earlier. Then what do you do, right? Then it becomes a question of really, like, again, we would advise our clients, in all honesty, to be honest, because the question usually is, have you smoked in the last 12 months?
By the way, if it was 6 months, does it still lead to increased premiums?
It does lead to increased premiums, but the question is, can insurance companies find out? That question is very complicated. We can never say for sure.
Which means they'll end up increasing their premiums.
Yes, they'll end up increasing their premiums, right? So if they find out later and you've not disclosed it, obviously there's grounds for them to deny the claim.
Got it.
So usually we tell people to disclose it, even if it was one puff, 6 months earlier, because we are just like, I know they may not ever discover it, but if they do, the odds, it's like, it's the consequences, right?
That example I was in, somebody got caught because they had a social media photo and they've taken a drag.
They can get caught, right? So that's the trade-off. With health insurance, luckily there are not, the caveats are not that fine.
Right.
So for instance, you don't have to pay extra premiums. If you disclose it, you have to disclose it. Right. In most cases, there are no adverse outcomes for you, right? The only thing that they may investigate is if you have some issue in the future, they may check to see if this is related to your smoking, and if they can establish a clear connection, which is very hard to do, then they can deny a claim. But it's not as easy. It's not as easy with health.
This has been one long conversation, but the idea was, again, to ensure that people have a really good starting point so that they don't get caught. So just to give you a few highlights that we've discussed throughout this discussion. One, disclosure is always good. Make sure to disclose everything and anything so that your claims don't get rejected. If you have a corporate policy, which probably most of you watching this video will have, make sure to get an individual health policy because it makes sense. 3, don't worry too much about the amount. I don't know if I'm saying it in the right way, but don't just, don't let it lead to decision paralysis. At some point, let's say if you are taking a health policy, maybe having a 15-20 lakhs is a reasonable policy, and then if need be, you can have a super top-up policy. For smokers, make sure you disclose, especially because I'm
or quit smoking. A lot of people quit smoking and then they wait,
Yeah, and in all this, I think one thing that has been a takeaway for me is you can't. If you were to have a bad health come, that's not in your control. The one thing in your control is making sure that you have a good healthy lifestyle. That means eating well, sleeping well, and being fit enough. I think that is probably one of the best health insurance policies. But apart from this, are there any other takeaways so that people watching this video will have something to take away?
I think the final takeaway for most people buying health or term insurance plan is simple. I think you've covered most of it. But if I had to add a couple of points, I would say that perhaps jumping to a decision very quickly when it comes to health and term insurance is not a good idea. Taking some degree of advice, taking some time for yourself, making sure you evaluate it, even if somebody says something, that's including us, right? Will probably aid you forever because it's a product that you buy once and you may use it once or twice in your life. With term insurance, you never use it. Somebody else uses it for you. It makes sense to invest some time and resources. And more importantly, I think overall, it ultimately depends on your budget. There's no such thing as best plan or good plan or nothing like that. Yeah, because somebody will say, oh, there's a rating list. A popular company puts out a rating list of the best insurance policies, right? When in fact I told you, somebody who's diabetic, the best will depend on their condition, right? Somebody who is a freelancer.
That's actually a good point. Even this applies to investing also.
Yeah. People
go by this best list, best fund list, so on and so forth.
Yeah, exactly.
That doesn't make sense there. It doesn't make sense with insurance.
Exactly, right? Some policies, like the best policies usually, they never extend their best, insurers never extend their best policies to people who have even the slightest health condition. They'll say buy something else. Right. So what's the point of the best for them, right? So I don't think best, etc. helps obviously in some sense, but I think people should take it with a pinch of salt and again consult with an advisor so that they have better help throughout the applications and also at the end when they have to make a claim, right? So I think that's perhaps the biggest takeaway for me.
Just adding one thing which I kind of missed out. It's a mistake I've done also. There's no such thing as too soon. If you have the ability to buy a policy, like you said, Netflix test, you should get a policy. When you are young, you're dumb and stupid, so you always assume that you are invincible. But the thing is, That's just youthful naivety. If you can get a policy, if you have the ability to pay for it, please pay for it. I think that's the best thing you can. It's one of the best investments you can make. Ironically, your best investment is not really picking the best fund or the best product. It's actually buying insurance, both term and life, so that you have that peace of mind and all your dependents are covered. So with that, it's a wrap. I personally learned a lot speaking to Shrehith. So Shrehith, thank you so much for doing this.
Thank you for having us.